Shall we start now? Ready? So, good evening, all of you. Yesterday we were doing perquisites and we started with section 17(2) and clause 3 we started yesterday, right? So, in clause 3, there are certain benefits which are prescribed. These are prescribed benefits for specified employees. So, 5 benefits are prescribed. First is motor car facility. Second is domestic servant facility. Third is gas, water and electricity facility. Fourth one is educational facility. And the fifth one, the last one is ticket facility. Ticket facility means free or concessional tickets provided. Travel tickets. Yes or no? So if any of these 5 perquisites or benefits which are prescribed for clause 3 for specified employees are given, then their valuation will be done and the value will be taxable under the head salary. So we are going to see the valuation rules. As per the valuation rule, how the value of each of this benefit will be calculated, and accordingly that value which we are calculating will be taxable. Okay, so the very first and very important benefit which we are going to start is motor car facility. So this is asked many times in the exams whenever there is a salary question. In salary question, majority of the questions, this perquisite is asked. You have to be very careful. Okay, valuation, very easy, but you have to apply a little bit of, common sense. If you'll apply the common sense, you'll automatically start getting the answers. But if you'll try to mug up, you'll not understand a single thing and you'll forget everything. Okay, and this perquisite will be fully confusing for you, especially this one, which we are going to discuss right now. Okay, so in 17(2), clause 3 is there, and as per clause 3, value of motor car facility. Now this value will be calculated as per rule 3 sub rule 2. Now this rule says that motor car for which the facility is being given. Okay, so first of all we'll have to check that whose motor car was that. If the motor car belongs to employee, then the motor car which belongs to employee, for this motor car the facility is given, or the motor car which belongs to the employer was given to the employee for use. For that motor car, the facility is given. So first of all, you will have to check that to whom the motor car belongs to. So first question will be, motor car is owned by employee or it is owned by employer. You have to see that whose motor car was that. Okay, so that motor car will be either owned by employee or it can be owned by employer also. But wait, it is not necessary that always the employer will give his own motor car. Sometimes he might take the motor car on rent also and give it to you for using it. Getting my point? So it can be owned by employer or taken on rent by employer. It can be any of these two. Okay. Now pay attention. If the motor car is owned by the employee, for that motor car, we have to check that the running and maintenance expense expenses of this motor car are met by whom? Okay, so if the car belongs to you, and its running and maintenance expenses are also met by you, met by employee only, then tell me, is there any benefit happening to you? Is the employer trying to give you any personal benefit? You are using your motor car. On that motor car, whatever expenses are happening, running and maintenance expense, all those expenses are also met by you. Is the employer providing you any personal benefit in this case? The answer is no. So there is no personal benefit arising in this case. This case will be ignored only. Ignore this case because there is no perquisite arising. Hello? Understanding? Now, if the motor car belongs to you, become an associate, become an employee and think. If the motor car belongs to you and its running and maintenance expenses are met by whom? Met by the employer. Then there is a benefit. Is there any benefit? What benefit? Ask yourself, what benefit is happening? Whatever expenses the employer is meeting, if he was not meeting it, you had to meet. Are you meeting those expenses? No. So you are saving that amount, no? Which the employer is meeting as expense. Hello? That is your benefit. Done. Getting my point? But wait, will that benefit be taxable for you? Now it will depend on that how you are using that motor car. So you are supposed to ask yourself 3 questions. First, whose motor car? Then you will come to know whether it is owned by employee or owned by employer. First question, whose motor car? Then after that, once you come to know that whose motor car was it, then second question, who is incurring the expense on that motor car? Hello? Who is incurring the expenses on that motor car? See, the running and maintenance expense which I am saying, these are the expenses incurred to run and maintain the motor car. Meaning that petrol expenses are there, repair expenses are there, all those expenses are covered. Now wait, here the employer can also additionally incur the expenses for driver. So this expenses can be with driver or without driver. But for sure, all the running and maintenance expenses are met by employer only. So all the expenses on running, all the expenses on maintenance are met by employer. Employer might incur. What did I say? Employer might also incur the expense of driver, or he might not incur. But these expenses are definitely incurred by him. Getting my point? Hello, sir? Understanding? So wait. Here the employer is having some benefit. Now you came to know that who is incurring the expense? Employer is incurring expense. Now whatever expenses the employer is earning will be your benefit. But would that benefit be taxable for you or it will be exempt for you? Now third question will be, how is that motor car being used? So that use of the motor car is also very important. 3 questions. Whose car? Who is incurring expense? And third, how the car is used. If the car is used only for official purpose, then the benefit arising will be fully exempt. What was the benefit? Amount spent by the employer is your benefit. Sometimes he might also recover some money from you. Getting my point? He is incurring some expenses amounting to 50,000 and he is saying, I will incur 50,000 but I will take back 20,000 from you. I will recover 20,000 from you. So how much is the benefit happening to you? Only 30,000. So that 30,000 benefit happening. But that benefit is happening for a car which is used only for official purpose. So the benefit arising worth 30,000 is fully of official nature because the car was used only for official purpose. Fully exempt, nothing taxable. But what if their car was used only for personal purpose? Then whatever benefit arising will be fully personal benefit, will be fully taxable. And how much benefit was arising? 30,000. Amount spent by the employer minus the recovery. That 30,000 benefit will be fully taxable. Now sometimes there might be a case where car is partly used for official purpose and partly used for personal purpose. Then should this entire benefit be exempted? Should this entire benefit be taxable? Or it should be exempt some amount and the balance amount should be taxable? Yes or no? Exempt, some amount will be out of the benefit, some amount will be considered as if it is for official purpose, exempt it, and the balance amount remaining will be treated for personal, will be taxable. Sure? Wait. So now you are supposed to see that the expenses met by employer and the motor car is used. Used for, come on, tell me, used for A, B, C, OO, OP, POPP. OO means only official purpose. OP means only personal purpose. POPP means partly official, partly personal purpose. Yes or no? Now in the same way, we'll have to calculate for other car also. See what I'll do here. I will copy this part. Pay attention over here. Pay attention. I will copy this part. Now here, the running and maintenance expense. Come on, tell me. Who can incur this running and maintenance expense? Either the employer can incur or the employee can also incur. If the employer is incurring on a car which is used only for official purpose, hello, or it can be same for the other part also. Now how many possibilities are there? Come on, tell me. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 possibilities are there. So what I'll do, this is part 1. This is part 2. In part 1, expenses are made by employee 1A and this is 1B. So if I say 1A, ignore. If I say 1B, then you are supposed to ask. In B, it is only official, only personal or partly official, partly personal. Yes or no? So if I say 1B, B. So you are supposed to say car owned by employee, expenses met by employer, and the car is used only for official purpose. Got it? Just like this, this is what? 2. This was 1, so this is 2. 2A, expenses met by employer. Then ABC, only official, only personal, partly official, partly personal. Then 2B, only official, only personal, partly official, partly personal. Now see, I will explain each of the point one by one. Yes or no? 9 possibilities are there. First possibility, 1A. Come on, tell me. Motor car belongs to employee. Hello. 1A means motor car belongs to employee, owned by employee, and expenses of the motor car met also by employee. What to do here? Come on, tell me. No personal benefit to the employee. Therefore, ignored. Done. Now let me come to 1 plus B. Let's see. 1 plus B. Car is owned by employee and the expenses are met by employer. Done, no? Now we are into this part. Now pay attention here. Everyone tell me, is the employer giving you the car to use or you are using your own car? You are using your own car. Meaning that employer is not giving the car to use. He is just meeting the expenses of your car. What benefit he is giving you? He is meeting the expenses of car, means that he is giving you the benefit towards the expense of that car, not the use of that car. Why? Because you are using your own car. If he would have allowed the use of his car, then you can say that use benefit is also happening. Hello, which we will see in the second part. Employer's car you will use. He has taken a car on rent and he is allowing the use of that car to you. So that time the benefit for use will also come. But right now benefit for use is not happening, no? What benefit is happening? He is only incurring the expense of that car. Which expense? Running and maintenance expense. It can be with the expense of driver or without the expense of driver. Yes or no? So here I will have to now see that in this scenario, A, only official, car is used only official, that whatever benefit will arise, don't you think that entire benefit will be for official nature? So here benefit is of official nature only, therefore what? Fully exempt. Whatever benefit happening, that is fully exempt, and in that case the taxable value of this perquisite will become nil. Everyone got this point? Now if they are saying that the car which belongs to you, expenses on that car are met by the employer, maybe with driver's salary or maybe without driver's salary, okay, no, whatever expenses he is incurring, repair, maintenance, along with driver or without the driver, don't you think that entire expense is your benefit? And whatever amount he is recovering from you, reduce that amount, balance remaining will be the benefit for you. And now that benefit should be fully taxable for you if the car is used only for personal purpose. Radlakshmi getting it? Kaushik getting it? Sure. So what I will do? This benefit is of personal nature only. Therefore, fully taxable. Now, if it is fully taxable, tell me how much will be the taxable value of this perquisite? Can I write down? Amount actually spent by employer, and this amount spent will always include the running and maintenance expense because he is incurring those expenses. Yes or no? But this amount may include the driver's salary or may not include driver's salary. Getting my point? So I'll write amount actually spent by employer may or may not include driver's expenses, driver's salary expenses. Done. Now, for example, if in the question they are saying that Mr. Mohan is the employee of X Limited. Listen to me very carefully. Yeah? Mohan is the employee of X Limited. Mohan is owning a car. Mohan is owning a car. The running and maintenance expenses of the car amounting to rupees 70,000 per month incurred by Mohan, but later on reimbursed by employer. Even though he is incurring, but are the expenses reimbursed by employer? Yes. So the expenses are met by employer only. There was a driver in the car. The driver's salary amounting to 30,000 for the full year also paid by the employer. So how much amount the employer is incurring for running and maintenance? 70. How much is incurring for driver? 30. 70 plus 30, 1 lakh rupees. This entire 1 lakh rupees met by employer is the benefit for Mohan. For this car, the employer is recovering 40,000 from Mohan. So 1 lakh benefit given, but out of that 40,000 recovered, no? Minus. How much remains? 60,000. Now they will definitely tell you in the question, this car was used by Mohan only for official purpose. Have you calculated this 60,000 benefit? Entire benefit is official in nature. Fully exempt. No need to calculate also. But if they are saying that this car was only for personal purpose, then this 60,000 benefit which you have calculated will be fully taxable. Got it? But how did you calculate this 60? You took the amount spent by employer on the motor car. Yes or no? Running and maintenance. You also took the driver's salary amounting to rupees 30,000. 70 plus 30, 1 lakh. But out of that, how much recovery was done? 40. That you reduced, no? So you are supposed to do the same thing here. Less. Recovery from employee, if any. If you will reduce this amount, no? There will be an amount. This amount is the taxable value of perquisite. Fully taxable. Fully. Because the car is used only for official purpose. Got it? This entire amount which you have calculated in B part, no? This entire amount was benefit in the A part also. But it was fully exempted because the car was used only for official purpose. So we did not bother to calculate also there. Because even if you would have calculated, the amount was exempt only, no? Taxable value has to be taken as nil only. So why to calculate also in the first case? Getting my point? So come on, C point. C point. Now the car is used partly official, partly personal. But wait. Before partly official, partly personal. Car belongs to Mohan. Amount spent by employer is 70 plus 30, 1 lakh. Hello. Recovery made from Mohan is 40,000. 60,000 benefit happening. 60,000 in A case also, 60,000 in B case also, 60,000 in C case also. In all the cases, the benefit is 60 only. But in the first case, full benefit 60,000 was exempted. In the second case, full benefit 60,000 taxable. But what do you think about the third case? Come on. Full benefit 60,000 should be exempt. Full 60,000 should be taxable. Or out of 60,000, some benefit relates to official use that should be exempted and the balance should be taxable. So what I will do, see, I will write down this. What I am doing? Copy and paste. Same benefit, copy and paste. But now tell me, is this benefit fully taxable? No. Out of this, some benefit will be considered towards the official use. That will be exempted. So how much will be considered for official use? Please pay attention here. Less. 1800 per month. Or it can be rupees 2400 per month also. So out of the total amount spent by the employer minus recovery from you, this much amount will be considered as if it is official and it will be exempt. So whatever balance will remain will be taxable. Getting my point? Hello? But wait. Reduce 1800 only if the engine capacity of the car was 1600 cc or less. So now you'll have to check the engine capacity also. If the car's engine capacity was 1.6 liter or less, 1.6 liter means 1600 cc. So sometimes it is known as 1600 cc, or sometimes it is known as 1.6 liter cubic capacity. One and the same thing. Okay, no? So if the engine capacity of the car was 1600 cc or less than that, then 1800 per month will be reduced. But what if the engine capacity of your car was greater than 1600 cc? Then reduce 2400 per month. Getting my point? But wait, this 1800 and 2400 will be reduced only when running and maintenance expenses were met by employer, not the driver. If the driver's expenses are also met, so don't you think that the amount actually spent will also include driver's expense? If the driver's expense is also included in this amount, getting my point, then don't reduce 1800, reduce 900 more, meaning that reduce 2700 per month. So what you will do, along with that extra 900 per month, also include, along with 1800, also include 900. And this 900 will be included if driver was also provided. Driver was also provided by the employer, meaning that along with the repair and maintenance cost of the vehicle, driver's cost is also met by the employer, meaning the driver was also provided. Then don't reduce 1800, reduce 1800 plus 900, 2700. Don't reduce 2400, reduce 2400 plus 900, 3300. Getting my point? But what if you are yourself driving the car, no driver was given? What if driver was there, but you were paying the salary of that driver? Then only reduce 1800 and 2400. Then don't take this 900. Getting my point, everyone? So this amount, out of the total amount, this amount will be considered as if it is for official use. As if this amount was for official out of the total benefit. And whatever balance will remain, no, that balance will now be your taxable value of perquisite. Partly official, partly personal. Did you understand this? Sure. Perfect. 2-3 questions you'll solve, no? You'll become a fan that, okay, this is very easy, sir, very easy. Understanding? We'll see. In the main question, this is given as adjustment. Now, in the main question, no, either you can have part A also, part B also can be there, or A and B not there, part C will be there in the main question. So you are supposed to identify from the question that exactly which part they are talking about in the question. Oh, in this part we did like this. Okay. So in the question also we are supposed to give the same type of what? Effect. Getting my point? Should I move ahead? Now I'll come to second part. Second part is, come on, tell me. Can you see this chart? Owned by employer or taken on rent by employer. So car is employer's car, or employer has taken that car on rent and now that car he is giving to you. And along with that car, he is incurring expenses also. See, A means amount spent by employer. Getting my point? Now, are you getting one benefit or two benefits? Come on, tell me. How many benefits you are getting? Two benefits. One, employer's car you will use. So by using that car, the benefit will arise. So benefit for use is also happening. And second benefit, he is meeting the expense also. So the benefit of expense will also arise. Getting my point, everyone? So now one benefit or two benefits? Two. So you are supposed to calculate both the benefits. First benefit, use. Come on, use. What are you using? Motor car. That motor car belongs to employer, or employer has taken that motor car on rent and he is giving that motor car to you. And by using that motor car, some benefit is happening to you. How much benefit is happening? Any movable asset. What did I say? Any movable asset either owned by the employer or employer has taken on rent and given to the employee. any movable asset, any movable asset, if it was owned by the employer, then how much benefit you will get? 10% per annum of the actual cost of that asset, which you actually saw in the furniture also yesterday. Because furniture was also movable asset and motor car is also a movable asset. Any other movable asset also you'll see, no, you will have that same amount, 10% per annum of the actual cost of that asset, if that asset was owned by the employer. But what if it was taken on rent by the employer and given to you? Then how much should be the benefit? Then the benefit should be the actual hire charges, actual rent for that asset paid by the employer. That amount will now be taken as your benefit by using that asset. So this benefit is happening. Hello? One benefit, use benefit, either 10% or actual hire charges paid by the employer. Yes or no? Second benefit, the expenses are also made by employer. So in the use benefit, I will have to add the expense benefit also. I will add what? Amount actually spent by the employer. May or may not be with driver's salary. Getting my point? So can I say this is the total benefit now? In this benefit, the benefit by use is also there. 10% or actual hire charges of the car. Yes or no? And benefit of expense is also there. Both the benefits are there. This is your total benefit. Now tell me, out of this, some amount if the employer recovers from you, reduce that amount. Whatever balance is there, that balance will be taxable. So in our example which we took, Mr. Mohan has one car. Now the example will be a little bit twisted. Mr. Mohan uses a car owned by the employer whose actual cost to the employer was 3 lakh rupees. Now this will be given. Now tell me, how much was the actual cost of the car? 3 lakhs. 10% per annum of 3 lakhs will be 30,000. So this is the benefit by using that car which belongs to which is owned by the employer, 30,000. Yes or no? But wait. 70,000 running maintenance expense also incurred. Yes or no? That is also your benefit. And 30,000 driver salary also met. Hello, that is also your benefit. So 30,000 by using the car, 70,000 expense, 30,000 driver salary. Add all these three amounts, you will get 1,30,000. Is the employer recovering 40,000 also? Remember, no, employer was recovering 40,000 minus. How much balance remains? 90. Will it be taxable for you? Fully exempt. Why? Because this car was used by you only for official purpose. But what if this car was used only for personal purpose? What will you do? This 90,000 which you have calculated, no, will be fully taxable. But what if this car was used partly official, partly personal? Should this be fully taxable or fully exempt? Or part is exempt and part is taxable? Getting my point? But wait, there is some catch here in the last part, which I'll tell you later. But did you understand what I want to convey? Pay attention. 2. Car belongs to the employer. Meaning, either it is owned by the employer or the employer has taken the car on rent. And that car you are using now. Plus A. Expenses of this car is also met by employer. Now, here A. This car is used only for official purpose. What did I say? Only official purpose. See, copy and after copy what we do? Paste. Done. Now wait, B. Only personal. What to do? Come on, tell me. I will write down the benefit is of personal nature only. Hence, the benefit is fully taxable. How much is the taxable amount? I will write down. Yes or no? I'll copy this part and I will write it down here. The benefit is fully of personal nature, sir. And this benefit, if it is of personal nature, it will be fully taxable. Now, how much will be the benefit? Come on, tell me. Guys, how much will be the benefit? Use plus expense minus recovery. Done. So, can I say? Wait. See here. Use benefit is how much? 10% per annum of actual cost of motor car or actual hire charges of motor car paid by employer. Whichever is lower, whichever is higher. Come on, tell me. 10% or actual hire charges. Whichever is higher, whichever is lower. Come on, which one? Higher? Should I do higher? Should I do lower? If owned motor car, then 10%. If hired motor car, then actual hire charges. Why higher or lower? Own motor car, write 10%. Ignore hire charges. If the motor car was hired and given it to you, then take higher charges. Ignore 10%. We are not supposed to do higher or lower over here. Hello? As the case may be. Either 10% will come for use or actual higher charges will come for use. Getting my point? Owned car, take 10%. Ignore actual higher charges. Rented car, take the actual higher charges. Ignore 10%. Got it? Higher. This is or. Okay, this is for use. Now, what is the benefit happening for expense? Come on, tell me. What is the expense benefit? Actual amount spent. Actual amount spent by whom? By the employer. And wait, now this actual amount will be running and maintenance cost spent by the employer because he is incurring that cost, no? This might include driver's salary, might not include driver's salary. Got it? So, can I say may or may not include driver's salary expense? Yes or no? Now, will you have total benefit? Both the benefits you will add total benefit, but out of that total benefit, some recovery is also happening. So, reduce recovery from employee and in the bracket you will write down if any. So now whatever balance will remain, no, whatever balance, that balance will be the taxable value of perquisite. And this amount will be fully taxable because the car is used only for personal purpose. Now this same benefit you would have calculated, you would have to exempt in the first part because the car was used only for official purpose. Getting my point? Now tell me, if I say that this car is used for partly official, partly personal purpose, yes or no? So, benefit is this only. Benefit is this only. But should this be fully taxable? Should this benefit be fully exempt? No, na. So, what we'll do? We'll take this benefit. Out of this, we'll take some amount as exempt and the balance will be taxable. Yes or no? So, the government says, no, don't do that. Don't do that. For this purpose, for this POPP, we will tell you a fixed amount, flat amount, that will be the taxable value. That's it. No need to do like this. Here we took the exempt amount, no, for official purpose. After reducing that amount, whatever balance remained, that got taxable. The benefit was same only, but out of that benefit we reduce some amount, assuming as if it is official. Yes or no? Here also we were supposed to do that only. We were supposed to copy this, okay, and from that some amount was supposed to be exempted towards the official use, and the balance would have been taxable. Yes or no? But the government is saying, the income tax rule is saying, don't do that. We will give you a flat amount. That flat amount will be taxable. And that flat amount, my dear friends, is 1800 per month or 2400 per month. This will be your taxable value of perquisite. Now, last time this amount was considered as official. Here, see, this amount was considered as official and it was reduced. But no, this time they are saying consider this amount only as your taxable amount. Pay tax on this amount. Take the full benefit. Out of that, take some exemption and the balance taxable. Why are you doing so much of hard work? Don't do that much hard work. We will give you a flat amount. At least pay tax on this amount. At least on this much amount you can pay tax. We are not asking you to pay a tax on higher amount. And we would not like if you pay tax on any lower amount. But at least pay tax on this much amount, no? This should be treated as your benefit now. Use plus expense, both taken together. Hello? Total amount, total benefit. Out of that, some exempt, balance taxable. No. Out of that, no. We consider this much amount only is your benefit. This much you tax. That's it. But this 1800 will be taxable if the engine capacity of the car is less than equal to 1600 cc. And if the engine capacity is greater than 1600 cc, then 2400 per month will be taxable. But wait. Along with this, add 900 per month extra if driver is also provided. Meaning. Employer's car you are using. Expenses also made by employer along with driver's expense. Total amount. In this total amount, can I say along with the running and maintenance cost, driver's cost is also made by employer? But we are not taxing the total amount. Forget about it. At least pay tax on 1800 plus 900, 2700 because the driver's expense was also made by employer. At least pay tax on 2400 plus 900, 3300 because the driver's cost was also made by employer. But if the driver's cost was not made by employer, hello, then pay tax on 1800 or 2400 as the case may be. Got it? So use benefit is there. Only running and maintenance expense made by employer. Car you were driving or driver salary you were paying. Then, and that car is used partly official, partly personal. Then 1800 plus 900, 2400 plus 900. No, only 1800, only 2400. Yes or no? And wait, this is the flat amount which you are supposed to tax, not any higher amount, not any lower amount. This amount will only be taxed for this type of car. So if for this car any recovery from employee is made, so that recovery from employee, don't reduce that recovery from this amount. Ignore this recovery because this flat amount will be taxed. Got it? But that recovery you have to reduce while calculating this benefit. Wait, see here. In B, you are reducing that recovery. Getting my point? But in C, when you will be doing the partly official, partly personal valuation, no. this flat amount will be taxable. Are you going to pay tax on more amount? If we are telling you to pay tax on this, are you going to pay tax on more amount? No. Then why are you paying tax on less amount than this? Why are you reducing recovery? Recovery will not be allowed. Pay tax on this flat amount. Getting my point? Understanding? Now, if I write, see, if I write 2B, what I want to say, motor car owned by employer or taken on hire by employer. But now the expenses, running and maintenance expenses are met by whom? Employee himself. Now one benefit or two benefits? Come on, which benefits happening? One benefit happening, two benefit. Only one benefit happening. Only use benefit. Expense benefit is not happening because expenses are met by employee only. Hello, sir. So what I'll do? I will copy and paste, but not the entire part. Only the use benefit I will copy. Because expense benefit, I don't have to add the expenses which I did in the last part. Yes or no? Now I will ignore the expenses. Because expenses are not made by employer. So why are you adding those expenses which are not happening as a benefit to you? Getting my point? So what we will do here? Come on, tell me. Now if this car is only official. Wait. Only official. Then no benefit only. Ignore this situation. Why, sir? Why no benefit? Car belongs to employer. You are incurring expense on the car and the car is used only for official purpose. What benefit he is trying to give you? Not even the official nature benefit. Getting my point? So there is no benefit only happening to you. Ignore this situation. Got it? Next one. Only personal. Now here you will tell me. You all will tell me. Only personal. The benefit is of personal nature only. Now if the benefit is of personal nature only, then what will be the taxable value of this benefit? Come on, you tell me. First, use benefit I will take because see, the car is owned by employer or taken on rent by the employer and you are using that car. So use benefit is happening, no? How much? This much only will happen, no? Come on. Use benefit, this much will happen. Oh, yo, no. Why delete? Copy. I will write down this use benefit over here. Same, copy, paste. But wait, is there any expense benefit happening? Add expense benefit. No, not happening, sir. Why, sir? Why not happening? Because the expenses are met only by employee only. So employee might incur all the running and maintenance expense. Definitely he is going to incur all the running and maintenance expense. Yes or no? So those running and maintenance expense will not be added here because employer is not incurring them. Employer is not giving the benefit for these expenses. But can I say apart from running and maintenance expense, the employer might pay the driver's salary? So the car he is giving, he is not incurring running and maintenance expense, but he can incur the expenses on driver's salary also, no? So will you write expenses, meaning that actual amount spent by employer as running and maintenance expense? No, this amount will not come because now this amount is spent by you. The employer is not giving this amount, so this amount is not your benefit. But as an expense, can I say I have to add driver's salary expense only if it is met by Employer. If it is met by employer, add driver's salary also. If it is not met by, don't add it. Getting my point? Hello? So this is use benefit. Expense met by employee, forget about expenses. But driver's salary can be given by employer, add that driver's salary also. Understood? Total benefit. Out of that, recovery from employee, if any, whatever balance will be there, that entire balance will be the taxable value of perquisite. Got it, everyone? Easy or no? Easy? No. It is made easy. It is made logical. Now, if you will mug up, you will never remember all these things. But apply the logics which we are applying right now while discussing, you will definitely get full correct answers. Read the question. Whose car? Sir, employee's car? No. Employer taken the car on rent of 10,000 per month, sir. So 10,000 into 12, 1,20,000 rent paid by employer, sir, on the car. And that car is given to Mohan for using it. So Mohan is getting the benefit by using the car. How much benefit? The actual amount of rent of that car paid by the employer, 1,20,000 is his benefit. That's it. Sir, the car expenses incurred by Mohan was 70,000. Not paid by employer, sir. Not reimbursed by employer, not paid by employer. Mohan only incurring, sir. So will you add that 70,000 over here? No need to add. But sir, that 30,000 rupees driver salary, no. That 30,000 rupees driver salary was given by the employer. So that you add over here. So 120 plus 30 will be 1,50,000. And for this car, sir, 40,000 was recovered from Mohan. Do you remember? In our example, 40,000 was recovered, no, from Mohan. Minus 40,000. So 1,20,000 plus 30,000 driver salary, 1,50,000. Out of that 40 recovered, meaning how much? 1,10,000. That 1,10,000 will be fully taxable. Getting my point? But wait, you will calculate only if the car is used only for official purpose. But what if this car was used only for personal purpose then? A fixed amount will be taxable. Just like in the last case, they told you that a fixed amount will be taxable. So here also they will tell you a fixed amount is taxable. But tell me, last time the fixed amount was 1,800 and 2,400 plus 900. Yes or no? Ignore the recovery. This was the benefit. This amount was taxable when you were getting two benefits. Use as well as expense. Two benefits you were getting. Then this amount was taxable. Now you are getting two benefits or only one benefit? Only one. So the fixed amount taxable here should be higher than this amount or it should be lower than this amount? Lower. Exactly. Because for two benefits, use as well as expense, for both these benefits, this much amount is taxable. But now what is happening, friends? Only one benefit, no, only use benefit happening. So now the flat amount will be taxed. If the car is used partly official, partly personal, the flat amount will be taxed. But that flat amount should not be more than the amount which you have already seen. It should be less than that. Then no. So they are saying if the car was used partly official, partly personal, then the taxable value of this perquisite will be, I will write in another color so that you remember, taxable value should be 600 per month or 900 per month. Depends on the engine capacity of the car. If the engine capacity is less than equal to 1600 cc, then 600 per month will be taxable. And if the engine capacity is greater than 1600 cc, then 900 per month will be taxable. This will be taxable. Always this will be taxable. Hello. But what if driver was provided? Did you add 30,000 driver's salary with 1,20,000? How much was the use? Use benefit was 1,20,000. In our example, use benefit was 1,20,000 because the car was taken on rent by the employer, 10,000 rupees per month into 12, 1,20,000 rent paid by the employer is nothing but the benefit for the use of the car, 1,20,000. Expenses, running and maintenance expense 70,000 met by Mohan only. No need to add that. But 30,000 rupees driver salary met by employer, no. So use benefit 120, driver salary benefit 30. So how much is the total benefit? 1,50,000. That benefit includes the driver salary also, no. Ignore this benefit. We don't want to charge tax. We will charge tax on a flat amount. But with this flat amount, please add 900 also now because the driver was also given. Getting my point? So add 900 per month extra if the driver was also given by the employer. If no driver was given, only 600, only 900. If driver was given 600 plus 600, 1200, 600 plus 900, 1500, 900 plus 900, 1800 will be taxable if the driver was given. And for this accommodation, for this perquisite, if the recovery is made, recovery from employee, please ignore that recovery because this flat amount will only be taxable. You are not going to pay tax on a higher amount, so we are not going to charge tax on a lower amount also. Pay tax on this flat amount. If any recovery happening for this type of car from the employee, that recovery will be ignored and this flat amount will be taxable. Everyone got this? Sure, sir. Now pay attention. What if the benefit is given by the employer for any other automotive, not motor car, but any other automotive? For example, scooter is there, motorcycle is there. So they are saying that if any other automotive owned by employee. What did I say? Owned by employee. Running and maintenance expenses of such automotive is met by employer. So can I say there is a benefit happening here? Running and maintenance expense met by whom? Employer. How many benefits happening? 2 benefits or 1 benefit? 2. 2 benefits. Or only 1? Only 1 benefit will happen, no? You are using your own scooter. You are using your own motorcycle. Is it given by the employer to use? No. So no use benefit. Only 1 benefit happening. What? Expense is met by employer. So do you remember? 1B. 1B. Motor car owned by employee. Expenses made by employer. Do you remember 1B? Copy. Paste. Copy. Paste. Now you will tell me. Come on, tell me. If this automotive, which was owned by whom? Employee. Running and maintenance expense met by employer. If it was used only official, come on, tell me. What will you do? Benefit is of official nature only. So it will be fully exempt. Therefore, taxable value of perquisite here nil. Sure? Now tell me. B. Only personal purpose. So can I say benefit is of personal nature only. Now therefore it is fully taxable also. Now, if it is fully taxable, what will be the taxable value? Come on, tell me. You will tell me. Amount actually spent by employer on your automotive. That is your benefit. No use benefit. Only the expense benefit will happen now. Minus recovery from employee, if any. And here the balance amount will be there. That balance will be the taxable value of purpose. Now, what if that automotive was used partly official, partly personal? Then benefit is this only, friends. Benefit is this only. Hello. This benefit fully exempt if only official use. This benefit fully taxable if only personal use. But now this benefit will not be fully exempt, will not be fully taxable, because now the use is partly official, partly personal. So what you will do? You will take this benefit. Out of that, some benefit will be treated as exempt and the balance will be taxable, as we did in the first part. Hello. It is similar to the first part only. Getting my point? But instead of motor car owned by the employee, now it is automotive owned by the employee. One and the same thing. Got it? So if motor car was owned, what you used to do? If motor car was owned by the employee, here. If motor car was used by the owned by the employee and the expenses were met by employer, this is same. This is also same. Hello. So this should also be the same, no? Copy, paste, but now a flat amount will be reduced towards the official use. So how much you reduced in the case of motor car? 1800 per month, 2400 per month. And if the employer is also meeting the expenses of driver, then extra 900 also. Hello. And you check the engine capacity of the motor car. Now instead of motor car, if they would have said that automotive is there, then first part same, second part same, third part should also be same. But in the third part, no. Now this will not come. Flat 900 will be reduced. Flat 900 per month. Instead of 1800, instead of 2400, now it will be 900 per month. And no need to add extra 900. No need to reduce extra 900 towards the driver's salary. Because with automotive, you will not be given a driver. Driver is given with motor car. Getting my point? So if it was motor car, then along with 1800 or 2400, reduce 900 extra. Hello. If the driver is also provided. But if it is automotive, take the same benefit. Reduce 900, not 1800, not 2400. Reduce 900 per month without even looking at the engine capacity of that automotive. Engine capacity you will see only if it was motor car. Getting my point? So what I'll do? I will copy this part. Copy. And I will paste it here. Okay, sir. Okay, sir. Sir. Wait. This part I have reduced. Now, same part I have taken here. Copy paste. Yes or no? This is the benefit. Out of this benefit, now minus 900 per month. Flat 900 per month will be reduced, assuming that out of the total expense made by employer on your automotive, 900 per month relates to your official use. Reduce it. No need to take extra 900 for driver over here. Instead of 1800 and 2400, ignore both these, reduce only 900. And there we used to reduce extra 900, no? Don't reduce that 900 for driver over here, because for automotive, there will be no driver. There will never be a driver with other automotives. Getting my point? So 900 per month you have reduced. This is the balance amount and this will be the taxable value of perquisite for partly official, partly personal. Got it? Sure, sir. Easy. Wait, huh? Now, Here you are saying that it is only official and the amount gets exempt. For automotive, hello, for automotive you are saying it is official and the benefit gets exempt. Or you are saying partly official, partly personal, and you get some amount as relaxation. Yes or no? Here also in motor car also see, you are saying only official, no benefit. Then partly official, partly personal, a flat amount is taxed, small, very less amount is taxed. Here partly official, partly personal, a flat amount is taxed, very less amount is taxed. Here only official, the benefit is exempt. That means now you came to know that if I will say that I'm using the motor car or automotive for official purpose, they are going to give me exemption. Yes or no? So will you ever tell them that you are using the car for personal purpose only? You will always tell them that whether you are using it for official purpose only or partly official, partly personal. Yes or no? Will they blindly believe you? Or they will try to take some evidence from you? Give some evidence? No. If you are saying official, no, we will consider official. We will give you exemption. If you are saying partly official, partly personal, so for the official use, part official use, give us some evidence, no? We will consider partly official also. What evidence? They will ask. They will tell you to go to your employer. So now you will go to your employer and ask your employer to issue a certificate for the official use of the motor car or automotive. Whatever the employer will certify, no, employer certifies that full official use. We will consider full official. If the employer certifies part, this much part is official, so we will consider part as what? Official. But if you are not bringing that certificate from your employer towards the official use of the car or automotive, we are always supposed to consider that as what? Personal only. Getting my point? So in order to claim the exemption towards the official use, you are supposed to bring a certificate for official use from the employer. And that certificate employer will issue on the basis of logbook of the car maintained by him. Logbook of the automotive maintained by him. He will literally maintain a logbook, date wise, distance traveled, from which place to which place, what is the average of the car. That entire logbook of that car will be maintained. What is the average of the car, how many kilometers the car is running. Based on the entries in the logbook, it will be certified that how much use by employee is considered as what? Official. Full or part. Getting my point? If he certifies that full use he is using only for official, I am certifying that it is only for official. Logbooks I have. If you want, we will provide you logbooks. Based on the logbooks only, I am issuing this certificate. Take this certificate and give the exemption to my employee. Getting my point? This is just a general knowledge point. Don't worry. It will not be asked. But official purpose use, you are saying and they will not believe. You are saying they will believe only if you are providing them a certificate brought from your employer. And that certificate, whenever you bring from your employer, no, has to be issued by your employer based on the logbook of the car maintained by him. Getting my point? And the official entries in that logbook, based on that certificate will be issued. Getting my point, everyone? Now there is one small case, small thing which I would like to explain over here. Motor car owned by employer, and or it can be hired by employer, and running and maintenance expenses also incurred by employer may or may not be with driver's salary expense. Done. Now tell me, what situation is this? This is 2, this is A. Do you remember? Now this type of motor car was given to you. If one motor car given which belongs to employer and expenses also made by employer, only official, only personal, or partly official, partly personal. Done, no? What if more than one such vehicles are given? Employer is giving you 3 motor cars, all the 3 belonging to employer, and the expenses of that motor car, expenses of that motor, all the 3 motor cars met by employer only. So you have such type of 3 cars now. How many cars? 3. So can I say more than one of such motor car? More than one? This situation is known as pool of cars. What will you call this situation? Pool of cars. In the pool of cars, what happens? That the employer will give you more than one car. And for all those cars, he is only going to do the expenses, all the expenses. Yes or no? So in case of such cars, all the cars, what if you say that all the cars are partly official, partly personal? That means for all the cars, you are trying to pay tax on a very low amount, 1800 or 2400. Hello? This car also partly official, partly personal, 1800 or 2400. Plus 900 extra for what? Driver. Sir, second car is also partly official, partly personal. For the second car also a flat amount, 1800 or 2400 plus 900 extra. If driver was provided. Sir, third car is also what? Third car is also partly official, partly personal. 1800 or 2400 per month plus 900 per month extra if the driver was also provided. For all the cars, you are trying to give POPP valuation. Hello? So, all such cars, for all such motor cars, POPP valuation, meaning 1800 or 2400 amount taxable. Yes or no? What did I say? For all such cars, POPP valuation will not be available. Out of these cars, any one motor car, option will be given to the assessee. You decide which motor car. If the employer has given you 3, no? Out of 3, which motor car you want to take, you take. But only one motor car will be treated as POPP. For only one car, you can show that taxable amount, flat amount as taxable. Not for the all motor cars. All the remaining motor cars will be considered as if they are fully personal. Understanding? So if car belongs to employer, meaning owned by employer or taken on hire by employer, that car is given to you for using it. Hello? And the expenses of that car also met by employer. May or may not be without, may or may not be with driver. Yes or no? So for all such cars, if such type of cars are given and they are more than one cars, such cars are given. But how many of such cars are given? More than one. Meaning that if employer is giving one car, then no problem. But if more than such cars are given by the employer, this is known as what? Pool of cars. What it is known as? Pool of cars. In the pool of cars, any one car, what did I say? Any one car will be treated as partly official, partly personal. For that, 1800 or 2400 along with 900 can be taxed. But for all the other cars, you cannot take that POPP valuation. For all the other cars, now you will have to show those cars as fully official. Sorry, fully personal. And the entire value of those two cars, remaining two cars, will be taxable. Use benefit plus expense benefit may or may not be with what? Driver salary minus recovery, whatever balance remain for second car, for third car, fully taxable. But only one car you can take that POPP valuation. So tell me, which car POPP valuation you will take? That car whose benefit value is highest. Use benefit plus expense benefit minus recovery you do for all the cars. Now check whose benefit value is highest. Take the exemption, take the POPP valuation for that car. For all the other cars whose valuation is less, show them taxable. Car 1, car 2, car 3. Car 1 cost 5 lakhs, car 2 cost 8 lakhs and car 3 cost 10 lakhs. Use benefit will be highest for which? Car 3, no? 10 lakh cost. 10% of that will be 1 lakh rupees. And lowest for which car? First, 5 lakhs. A little bit higher. Second, 8 lakhs. Hello? Expenses for first car only 20,000. Expenses for second car only 25,000. And expenses for third car 75,000. First car will have a value of 5 lakh into 10%, 50,000 plus 20,000 expense. Total is 70,000. Out of that, for example, if the employer recovers 10,000, how much is the taxable value? 60,000 only. It is better to show this 60,000 taxable, no? Second car is 8 lakh into 10%, 80,000. Expenses of this car met by employer was 45,000. 25, it was 25. So 80 plus 25, 1 lakh 5,000. Hello? And for this car, the employer is recovering 40,000. So 80,000 plus 25,000, 1 lakh 5,000 minus how much? Minus 40,000 will give you 65,000. This is still lower than the third one. Because third one, the actual cost is 10 lakhs. 10% of 10 lakhs, 1 lakh. Expenses made by employer, 75,000. 1 lakh 75,000. And amount recovered from you for that car was 75,000. Come on, 75,000. Reduce. Still 1 lakh is taxable. 60,000, then 65,000, then 1 lakh. Which is the highest amount? 1 lakh, no? So are you interested in paying tax on that 1 lakh? Claim that car as POPP. Only 1,800 or 2,400 will be taxable for that car. But for both the other cars, this entire full value which you have calculated, no, that will be taxable. Getting my point? Hello, sir. Now, do you remember something? Chengalpattu to Chennai, Chennai to Chengalpattu, commuting, transportation, employee is handicapped, a fixed amount is given for this commute, commutation allowance, transport allowance. For handicap employees, 3,200 per month is exempt. But if it is given for other employees, fully taxable. Employer is giving you a fixed amount on a regular basis for this commute, for this transportation. Then it will be transport allowance. Then it will be commutation allowance. If you are a handicap employee, exempt up to 3,200 per month. If you are not a handicap employee, fully taxable. Remember, no? Sure, no? Now what if every day car comes at your home? Okay. A car will come at your home, pick you from your home and drop you at office. Okay. Wait. This is car, no? Car is coming at your home and you are sitting in the car. So from your house, you are in the car. Now, car will go to office. You will get down. You will work in the office. Hello, sir. Now, in the evening, the same car will take you back to the home. Hello, sir. Next day, again the car will come, take you to the office. Again from the office, car will take you to the house. This is commutation facility, transport facility. On this facility, whatever amount your employer is incurring as a cost is your benefit. Yes or no? Fully exempt. Because it is a perquisite. So they are saying that conveyance facility. They are saying motor car facility. They are saying that car facility given to the employee for transportation between house and office, between residence and office, and the value of this benefit is 50,000 rupees. The employer is spending 50,000 for this benefit. So you are getting the 50,000 worth of benefit. Fully exempt. Nothing taxable for all the employees. But what if this thing was given as a allowance? Amount was given. Facility was not given. Amount was given. Then it was fully taxable. Or if you are a handicap employee, exempt up to 3,200, balance will be taxable. Hello, sir. Both under 115 BSE, default tax scheme, as well as shifting out of default tax scheme. You will get that exemption. Yes or no? But that is given for allowance. And this is not allowance. Entire benefit value of this facility will be fully exempt. Just imagine if you consider this thing to be your allowance. The difference between perquisite and allowance is forgotten in the exam. This 50,000 you will charge tax, but this was not taxable. Your entire answer will be wrong. Getting my point? Will you remember this? So this is what? This is, can I say motor car facility? Motor car or transport facility between residence and office. So on this facility, whatever amount spent by the employer is your benefit, but that benefit is fully exempt. So this facility is fully exempt for all types of employees. Yes or no? So the taxable value of this perquisite will be nil. Done, everyone? Sure. This brings to an end your motor car facility. Just see how much time we have spent for this motor car facility. Now anyone will ask you, no, you will be able to give the answers with logics, provided you revise and retain these things in your minds. Don't try to mug up the things. I'm telling you again, in motor car facility, if you will try to remember, if you will try to buy out the things, if you will try to mug up the things, you will completely screw everything in this. Whatever efforts we have put in, no, all will be wasted. Don't try to mug up or don't try to do this thing, just remember with the logic. That's it. Got it? So motor car facility done. Next, we are into clause 3 only. Sir, we are into 17 subsection 2 clause 3. Now in clause 3, second benefit which was prescribed for specified employees was provisioning of domestic servants. What do you mean by domestic servants, sir? Cook, gardener, personal attendant, sweeper, those people who are domestic help, who will help you at your house. Hello. So they are domestic servants only, yes or no? So those domestic servants are provided to you by your employer. Wait, wait, very important point I am going to discuss now. I am employing someone and sending him to you to work. So that domestic servant was employed by me only, so that he can come and work for you. So I am giving him employment. I am liable to pay him the salary, yes or no? And then I am sending my one employee to go and work for my other employee. My instruction for him will be, you are not supposed to work for me. You are supposed to work for my another employee. Go to his house. Domestic servant, I have engaged and I am providing those domestic servants to you. Then you will come under this clause. Getting my point? So what is the benefit which will happen to you? So the value of this perquisite will be as per rule 3, sub rule 3. They are saying that the salary of domestic servants paid by whom? Employer has engaged, so he will only pay, no? So whatever salary employer has paid to those domestic servants will be your benefit, because if I would not pay that much amount, you have to pay that much amount, which you are not paying, because I am paying and I am engaging them and providing those servants to you. So by providing these kind of services, by providing these kind of domestic servants, whatever salary I have paid them, you are saving that salary, no? So that is your benefit. Getting my point? Less. Can I take some amount for that domestic servants from you? Yes, I will provide servants. To them, I will pay 1000 rupees salary. So the employee, so the domestic servant, which I will be providing you, will be, his salary will be 1000 rupees per month. I will have to pay. But don't worry, you give me only 200. You will be given domestic servants from my side only. But for those domestic servants, my cost is 1000. You just give me 200. So how much is the benefit? 1000 rupees is your benefit. But out of that 200 taken away, no? Reduce that. 800 will be your benefit. Hello, sir. So less recovery from employee, if any. What if I am not recovering anything from you? Then entire 1000 will be your benefit. Hello, sir. So this is the taxable value of perquisite. And this value you will calculate and you will charge only if you are a specified employee. What if you are a non-specified employee? Come on, tell me. What if you are a non-specified employee? This clause 3 perquisite is not taxable for you. And if it is not taxable for you, you are not supposed to calculate this value also. Getting my point? Now wait. Pay attention. I'm giving you one example. 2 examples I'll give you. From those 2 examples, you will come to know that what I want to convey. You are my employee. Your name is Madhav. Your name is Madhav. Madhav, see, I'm engaging some domestic servants. To these domestic servants, I'll pay monthly salary of 1500. I am engaging them for 1500 rupees per month. I will send these domestic servants to you. Pay me only 1000 rupees. Is it a benefit for you? Yes or no? Is it a benefit for you? Yes. Domestic servants provided. It is a benefit for you. How much? The salary which I am paying them, 1500, is your benefit. Minus I am recovering 1000. No. Minus 500 will be taxable as per this. If you are a specified employee, no Madhav, then 500 will be taxable for you. If you are a non-specified, no Madhav, then this 500 will not be taxable for you. For you, the valuation will not be done only. Got it, no Madhav? Hello, Madhav? Now, Madhav, let's twist this example a little bit. Second example. Madhav, you already have a servant. Oh, you engaged him. Oh, how much is the salary, Madhav? 1500 per month. Okay. Take Macha. Take 1500. Did I provide domestic servant? Clause 3. No. Because I have not engaged them, I am not liable to pay them. Hello. This is not clause 3. Clause 3 will come only if I have engaged. I have the liability to pay them. And I am engaging and providing to you, only then it will be your clause 3 perquisite. But in the second case, what I did I provide you servant whose salary I was paying 1500? No, I did not provide you that servant. Servant you yourself engaged. Your servant doesn't know who I am. If you are not going to pay to your servant, I am not liable to make the payment. To make the payment to your servant engaged by you is your liability, your obligation. It is not my liability. Hello? But still your employer is a good fellow, no? Is he meeting your liability? Is he meeting your obligation? Then meeting your liability, meeting an obligation cannot be providing servant. Hello? It cannot be clause 3. It will be clause 4 perquisite. 17 subsection 2 clause 4. And that clause 4 says, if the employer has met any liability or any obligation of the employee, then that liability, that obligation met by the employer on behalf of the employee will also be a perquisite taxable in the hands of employee. But not as per clause 3. It is as per clause 4. And if it is clause 4, no. So whether you are a specified employee or a non-specified employee will not make any difference. The entire benefit will be taxable. And how much will be the benefit? Valuation is not to be done here. You know how much is the benefit. The amount which is paid by the employer, the amount which is reimbursed by the employer is your benefit. Fully taxable. That's it. Hello, sir. How much I paid? I paid the entire 1500 salary of Madhav, no? Of your domestic servant, no? That entire 1500 which I paid for those servants which were engaged by you will be your benefit. Fully taxable for you. Clause number 4. In the examination, no, they will deliberately tell you that domestic servants provided. Domestic servants provided? No. They will deliberately tell you domestic servants engaged by the employee. Domestic servants engaged by the employee. Monthly salary of that domestic servant was 1200 per month. Employer paid that salary or employer reimbursed that salary to the employee. Benefit? Yes, benefit. Now they will write the employee was a non-specified employee. Deliberately they will write employee is a non-specified employee. You will say, sir only said that domestic servants taxable only for specified employees, not for non-specified employees. So they are saying that the employee is what? Non-specified. Domestic servant, no. Fully exempt, not taxable. Gone. Gone. Because you were thinking that it is clause 3 perquisite, not taxable for non-specified employee, but it was not clause 3 perquisite, it was clause 4 perquisite, which you could not differentiate. I did not engage a servant and provide you. Did I engage that servant and did I provide that servant to you? No. You yourself engaged. To make the payment of that 1200 per month to that domestic servant was your obligation. It was your liability. But I met it. This is not clause 3. This is clause 4 perquisite. So even if it is given in the question that it is employee is what? Non-specified employee. Still the entire benefit of 1200 paid by the employer. Hello? Will be taxable in your hands. Even if you are not a specified employee. Got it? Sure. Would you solve one question? But wait, before solving the question, I'll ask you one more question. I am giving you 5,000 rupees per month to keep domestic servants at your home. Am I paying the salary of your domestic servant? No. Am I providing domestic servants? No. This is not a perquisite. I'm giving you 5,000 rupees per month to keep domestic servants. That 5,000 per month can be used for domestic servant or any other purpose also. That is allowance, my dear friends, allowance. 5,000 rupees per month domestic servant allowance, fully taxable. They will deliberately tell you that out of that domestic servant allowance, no, you have actually spent 4,500 per month for domestic to engage the domestic servants. Underline. Then what do we do after underline? Bullshit. This information that how much out of the domestic servant allowance I am spending to keep the domestic servant is irrelevant, because on the basis of amount spent out of this allowance, I'm not going to get any exemption or deduction. This allowance is fully taxable and the amount spent will not entitle me to take any deduction or exemption for that. Hence ignored. Hello, sir. Will you remember this? Sure. Come to question number 19. 19th question. There are two employees, Mr. X and Mr. Y. They are working for Gamma Limited. As per salary fixation norms, the following perquisites were offered to Mr. X. Mr. X who engaged a domestic servant, meaning that domestic servant is not provided. Now you are engaging your domestic servant. Employee is engaging domestic servant. This domestic servant, the payment of the salary to this servant will be obligation of Mr. X. It will be the liability of Mr. X. And how much is the salary? 500 per month. Now his employer reimbursed the entire salary paid to the domestic servant 500 per month. Now they are saying that you are required to comment on the taxability of above in the hands of Mr. X and Y who are not specified. Even if Mr. X is not a specified employee, no, this perquisite will be taxable for him. Why? Because this is not clause 3 perquisite, this is clause 4 perquisite. So what I'll do here, I'll write down here the perquisite is 17 subsection 2 clause 4. Okay. And even if X is specified employee or a non-specified employee, in both the cases, the perquisite will be taxable. In both the cases, the perquisite will be taxable. And in the second case, this perquisite is 17 subsection 2 clause 3 perquisite. Why, sir? Why? See, Mr. Y was provided with a domestic servant at rupees 500 per month as a remuneration package, meaning that don't engage your servant. We will provide you domestic servants. So who will engage the servant? Employer will engage and give that servant to you. In that case, this is not clause 4, this is clause 3 perquisite. Domestic servants will be provided. Servants are given. Now, what will you do? This is clause 3 perquisite. If Mr. Y is a specified employee, then only that value of 500 per month will be taxable. And if he is a non-specified employee, then this will not be taxable. Here it will be taxable, 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 and here it will not be taxable. Done? Easy, no? Now if you will read the answer, you will get the same explanation. Should I move ahead? Should I move ahead? Okay, very good. Come on. Now, I will tell you about subsection 2 clause 3 only. Clause 3 only. Now, clause 3 says provisioning of gas, water, electricity. I'm trying to give you some hint. Gas, water, electricity provided. Only then clause 3. Taxable in the hands of specified employee, not taxable for non-specified employee. How much taxable? Come on, tell me, how much taxable? Valuation will be done. So, this gas, water, electricity, the benefit arising from this facility, okay, the value will be taxable under the head income from salary. So what will be the value? Rule 3 sub rule 4. And rule 3(4) says that if the gas, water, electricity is provided from own resources. Own resources means employer himself manufacturing and giving it to you from own resources. Getting my point? And what if the gas, water, electricity is purchased by employer from outside agencies? I will give you gas, water, electricity, but I'm not producing, I'm not manufacturing. Now I will purchase from someone else, outside parties, and then I will provide. So the connection will be taken on my name. I will be liable to pay. Hello? Connection will be taken on my name. I will be liable to pay, but provided to you. You use. Do you remember that accommodation which I provided? In that accommodation, gas is there, water is there, electricity is there. And that gas, water, electricity is purchased from some outside agencies. Bills are coming on the name of your employer. But that accommodation is with you. So you will be using that gas, water, electricity, no? So I said, okay, go to that accommodation See, this accommodation I am giving you, in that accommodation I will provide you gas also. I will provide you electricity also. I will provide you water also. All the gas, water, electricity bill, you will ask, sir, from where you will provide? That is none of your business. I will see to it. Either I will manufacture and connection will be given at your home. Hello? Or from some outside agencies only, I will take the connection on my name. Yes or no? Then I can say that it is a perquisite under clause 3. And the rule 3.4 will be applicable. As per this rule, this value given or this value given will be taxable in the hands of specified employee only. So if provided from employer's resources, then the taxable value of this perquisite will be how much? Production or manufacturing cost of such gas, water, electricity provided to employee. So whatever production cost happening to me, whatever gas, water, electricity I am providing you, I might have produced, I might have manufactured. So what was my production cost for that thing? Hello, which I am providing. Getting my point? I am manufacturing in myself, producing myself and giving it to you. So whatever gas, whatever water or electricity I have given to you, what was the production cost of that or manufacturing cost of that to me? I will have to take that amount. That will be your benefit. Because see, if I would not have provided to you, you were not my employee. For example, if you were not my employee, then definitely you would have come to me to buy this from me. I would have at least recovered the cost from you, no? Which I'm not recovering because you are getting it free. Hello, because I'm providing you. So because I'm providing from my resources, if I was not providing from my resources, if you were not my employee, then you had to come to me to buy this. At least you would have given me my production cost as a price for this, no? Which you are not giving, which you are saving, which is your benefit. Ayyo, understanding? Minus. Will I make any recovery from you? Yes. My production cost is how much? 80 rupees per unit multiplied by the number of units which I am providing you. Hello? So, for example, if I am providing you 1000 units, so 80 into 1000 will be 80,000. So, 80,000 will be your benefit for the full year. Minus per unit I will recover 30 from you. So, 30 into 1000, 30,000 I have recovered from you. Giving you 80,000 benefit, recovering 30,000. How much is your benefit? 50. 50 will be taxable. Getting my point, everyone? So, recovery from employee and in the bracket if any. This will be your benefit. This will be your benefit. Will be taxable in your hands. Done? Now wait. Now I am not manufacturing. I am procuring from outside. I am purchasing from outside agencies and I am giving it to you. So what should be your benefit? Simple. Whatever cost I incurred to purchase it, whatever was my purchase price, even you would have given that purchase price if you would have gone and bought it, no? Hello? That seller of gas, water, electricity is not my relative or not your relative. If he is taking this much from me, he is going to take this much from you also, no? Which you are not giving. Because bills are not on your name, bills are on my name. I have to give it. So whatever amount I have paid, amount actually spent, taxable value here will be amount actually paid by employer to procure from outside agencies. That amount you are saving. That amount is your benefit. Minus I will charge something from you. Recovery from employee, if any. Done, sir? Will you remember? This valuation is given in rule 3, sub rule 4. And this valuation you will do only if the gas, water, electricity is provided to you, either from own resources or by purchasing from outside. Will be taxable only if you are a specified employee. Okay, and only then calculate this value. What if you are a non-specified employee and you are getting this? This valuation is not to be done because that benefit is not taxable for you only. Hello? But what if gas, water, electricity you are buying only? Bills are coming on your name. So gas bill, water bill, electricity bill are coming on your names. You are my employee. So you are yourself buying it from outside. But I am making the payment for them, or you make the payment, I will reimburse. Now friends, this is not clause 3 perquisite because the bills are coming on your name. There was a liability to pay those bills on you. It was your obligation. But it is paid by me, met by me, so it is a benefit for you. But that benefit is not clause 3 benefit. That benefit is clause 4 benefit. Got it? If you are a specified employee, then also taxable. Non-specified employee, then also taxable. How much value will be taxable, sir? No need to do the valuation. This rule will not be applicable there. Whatever amount paid by me as your obligation or as your liability, whatever amount paid by me or reimbursed by me will be your benefit, will be fully taxable for you. That's it. Hello, sir. So you'll come to clause number 3 only in this case, huh? Sure. So if I say here a common point now, if domestic servants engaged by employee and their salary paid or reimbursed by whom? By employer, then 17 to 3 not applicable, and hence rule 3, sub rule 3 not applicable. Here 17 to 4 is applicable. For this 17 to 4 is applicable. So if employee is a specified employee or he is a non-specified employee, in both the cases the benefit will be taxable. So how much amount will be taxable? Taxable value of perquisite here will be, tell me how much? Amount actually paid or reimbursed by employer. So this was for your domestic servants, yes or no? Now the same thing I will write for whom? Gas, water, electricity also. Same thing. What I will write, Pay attention. Instead of this, color, blue color, please check. Gas, water, electricity, bills paid or reimbursed by the employer. So this is not clause 3 perquisite. Valuation rule 3, sub rule 4 will not be applicable. Here clause 4 will be applicable. Specified employee then also taxable. Non-specified employee then also taxable. Amount actually paid or reimbursed by the employer for your gas bills, for your electricity bills, for your water bills will be your benefit, fully taxable for you. Done. Both the things done together. Got it, sir? Everyone, sir? So now 3 benefits out of 5 which are given in clause 3 we have completed. Now we are going to educational facility. This perquisite which we are going to discuss is education facility. Okay. Now this education facility shall be provided by the employer. But this facility will be provided by the employer. It will be provided for employees, children, or it will be provided for members of household of the employee. So employee's children means his son, daughter, etc. But household member of the employee means what? Employee's spouse can be there. Household member only. Employee's brother, sister, or employee's grandchildren can also be there. Right or no? So they are household members of the employee. So whenever this educational facility is provided by the employer, it can be provided either in an institution which is owned and maintained by the employer, or where the employer has some arrangements. Now, have you heard about a company named Reliance? So Reliance is a company, but have you heard that Reliance runs its own schools? In that school, who will study? The employees' children and their household members. So that school which is run by Reliance, it is a school which is owned and maintained by Reliance, owned and maintained by the employer, where the employees' children or employees' household member will study. Tata, have you heard Tata? Tata also has their own schools. Big employers, big companies, okay? They must be having their own schools. See, I gave you one example in house property chapter. That very big factory is getting set up in very remote area. So in that factory, I need some employees and workers to work. So what I'll do? Those workers and those employees will come from far away places. So they will bring their family also, no? So I have constructed a township nearby the factory. In that township, what I have done? I have constructed many houses. In those houses, my employees and my workers will stay with their family. So employees will stay with their family. Employees will come and work in my factory. What about their family? For their family also I will have to think, no? So in that township itself, I have constructed school, I have constructed hospital, I have constructed temples, many other, recreational facilities I have provided, so that even the employees and their household members, their family members can stay there. See, employee or workers will not come alone. They will always bring their family, no? So I'll have to take care of their family also. Their families are not working in my factory. They are working in my family, but their families will be staying with them. So I'll have to take care of the comfort of their family, where their children will go to study. A school is very far, 100 kilometers far away from here. So will the employees send their children 100 kilometers every day? What if somebody falls ill? A hospital is 100 kilometers away because a town, nearby town is 100 kilometers away. So the employer will make all the arrangements there only. So there, one school is also constructed. That school is owned and maintained by the employer only. The teachers will be, employed over there. School will be run properly. But that school, entire cost to run that school will be met by the employer. So that is a school which is owned and managed by the employer. Now there can be a school where the employer has some arrangements. See, I am not owning and maintaining any school because there is a school nearby. So instead of owning and maintaining a school, taking one botheration on my head, what I do? I will not own and maintain a school. Rather, the nearby school is there. I'll go there and I will reserve 500 seats. 500 seats are reserved in that school for my employees' children and their household member. To that school management, I will tell that, okay, in your school, see, we are opening a very big factory over here. Many employees will come and their family members will also come. There will be thousands of people staying in my township and thousands of people staying. So many kids will also be there. These are my employees' kids. These are my employees' household members. Even they would like to come to your school to study. So in your school, don't give admission on these 500 seats. 500 seats reserved for me. In these 500 seats, my employees' children and their household members will come and they will study here. Understanding? Now tell me, employees, children or employees' household member can study in these kind of institutes, educational institutes. It can be school, it can be college, it can be university. Okay, no? So, or the educational facility provided can be provided in any other institute, other institution. Other institution means owned and maintained by employer? No. Arrangements? No. No arrangements, not owned and maintained. Any other institute. Getting my point? So, in any other institute also, the facility can be given. Now, what I will be doing? I will be discussing this same benefit 2 times. Once, if this facility is given for employees' children, then how the valuation will be done. And then I will say that if that same facility in these institutions will be given for household members of the employee, then how the benefit will be calculated. Yes or no? What the valuation rule says. So I will say that if education facility is provided provided by the employer for employees' children. I'm specifically talking about employees' children and nobody else. Household member I'll cover later on. Okay. If the educational facility is provided for employees' children. Okay. So this facility is given. This facility is given it can be given here also, it can be given here also. I'll copy paste. Okay, no? Copy and then paste. So the facility can be given in such type of institute or the facility can be given in such type of institute. Okay. For the children of the employee. I'm talking about them. Okay. Now tell me, how much will be the benefit according to you? If you are my employee, assume that you are my employee. Okay. And I am owning and maintaining a school. Or there is one school where I am having some arrangements. I have reserved some seats. In this type of school, your son, employee, your son, your child is studying in this school in standard 8th. So I must incur some expense on your child's education in this school. Tell me. So the amount which your employer has incurred on the education of your child, is this amount your benefit? Tell me yes or no. So in this school, in this type of institution, an amount will be actually incurred for the education. By whom? By employer. So the amount which is actually incurred, what did I say? Amount which is actually incurred by the employer in such school, isn't it your benefit? Is it your benefit? This is not your benefit. Because just think that school is owned and maintained by me, or the school I am having some arrangement. In this school, whatever expense I will incur will be very less as compared to what it should be. Because in my school, which I am owning and maintaining, whatever amount I will spend on the education of your child will be very less only, no? Because the school is owned and managed by me. Or where I am having some arrangement, just imagine if I have booked 500 seats, I have reserved in a particular school, how much discount that school will give me for education. If they are charging 500 rupees from someone per month, they will charge only peanuts, only 200 from me, because I have reserved 500 seat at once. So the amount which I will be actually incurring in this school will not be a reasonable amount, will be a very discounted amount. And how can that amount be treated as your benefit? Because the amount itself is very low. Getting my point? For example, the actual amount I am spending on your child's education in my school in standard 8, that amount is 500 rupees per month. Example, if this amount is 500 rupees per month, so I am spending how much? 500 rupees. This 500 is very discounted price, very less price, because it is incurred actually by me in my own school or in a school where I have some arrangements. So this should not be taken as your benefit. Rule 3 sub rule 5 says, see, we are doing the valuation, no? So valuation is as per rule 3 sub rule 5. Whatever we are discussing is as per rule 3 sub rule 5. That rule says that this should not be taken as your benefit employee. Just imagine if this school was not there, employer school was not there, or the school where the employer has arrangement, if this school was not there, your child would have gone to a similar school in the same locality or in the nearby locality. So in the same locality or in the nearby locality, if a similar type of school is there, your child would be studying in that school if this school was not there. So go and check in that school, which is in or nearby the same locality. If there is a similar school, go and check in that similar school. What is the cost of education of a child in standard 8th? And when you actually checked, no, there the cost of education of your child for standard 8th was not 500, it was 1700 per month, because that school was charging a fees of 1700 per month. So just imagine if your employer school was not there, if that school was not there where your employer has some arrangement, you would have definitely sent your child to this school only, which is a similar type of school. And in this school, how much cost you had to incur for your child's education in standard 8? 1700 per month. Are you incurring that 1700 or you are saving it because of this school where your child is now studying? So this should not be the benefit which your employer is actually incurring. The benefit should be that 1700 which you are saving because your child is studying in this school. Getting my point? So whenever you see such amount, you'll have to ignore. What will you take? Reasonable cost of education. What is that reasonable cost of education? It is the cost of education in similar type of school, similar type of institution in or nearby the same locality. Got it? So what benefit will be here? The benefit will be cost of education in or in a similar school Similar school means similar educational institution. Okay. In or nearby the same locality. We sometimes call it, this is a reasonable cost of your child's education. This is the reasonable cost of education. This is the reasonable amount which you should have spent, which you are not saving, which you are not spending, which you are saving. And that was how much? That was 1700 per month. So if you will see 500, you will charge 500 or you will charge 1700. Yes, ignore 500. They will deliberately give that 500 to you, thinking that you will commit mistake. But you will take 1700 and in the bracket you will write, you cannot confuse me because we are Vamsa students. Okay, so understood this much? But wait, there is a catch. What catch is here? Whenever you will take reasonable cost of education, no? Whenever this reasonable cost of education is your benefit as per rule 3 sub rule 5. So that rule 3 sub rule 5 says that this reasonable cost of education, if it is up to rupees 1000 per month per child, then this benefit is not taxable. See how good it is now. First of all, they are not taking amount actually spent by the employer. They are taking only reasonable cost. And if that reasonable cost happens to be 1000 rupees per month per child or less than that, it will not be taxed. Go, fully exempt. Meaning that this reasonable cost will be your benefit and will be taxable only if it is more than 1000 per month per child. Yes or no? But wait, rule is silent. Rule says that if the reasonable cost of education is 1000 per month per child, then it is not taxable. Then rule becomes silent. What is to be done if that reasonable cost is more than 1000 per month per child? Rule does not say anything about it. So what interpretation we can draw? We can draw an interpretation that if reasonable cost up to 1000 per month per child is exempt, that means by default, reasonable cost, if it is more than 1000 per month per child, then it is taxable. But how much should be taxable? Rule is silent, no? So we have two options now. Either we can charge amount in excess of 1000 as taxable, or we can charge the entire amount of reasonable cost as taxable. Whatever we are doing now, our answer will be correct only. The institute will give us full marks. They cannot deduct a single mark because the rule is silent. That what is to be done if it is more than 1000. Taxable, but how much taxable? Rule is not saying. Rule is ambiguous. There is ambiguity in the rule. So in that case, if the student has charged more than 1000, then also he is correct. And if the student has charged full amount of reasonable cost, then also the student is correct. He should be given full marks. Don't worry about that. So if reasonable cost of education is greater than 1000 per month per child, then two possibilities. Either that amount is fully taxable or excess amount above 1000 can also be taxable. Getting my point? If you follow this, okay, both are correct. Follow only one. Both are correct, so write down both the amounts. No. In your salary statement, you will have to give on any one effect. So if you are charging fully taxable, then in the note you are supposed to write alternatively excess amount can also be taxable. But in your main solution, in your salary statement, if you are charging excess amount, hello, then in the note you write down alternatively full amount can also be taxable. So in our example, how much was the reasonable cost, friends? How much? It was 1700 per month per child. Okay. If it was only 700, then nothing taxable. But if it is more than 1000, meaning 1700, hello, then two options. Full 1700 can also be taxed, and amount in excess of 1000, meaning 700 can also be taxed. Got it? Reasonable cost of education in similar institution for the children of the employee will be exempt if it is 1000 per month per child or less. Full stop. But what if that reasonable cost of education for the education of employees' children is 1000 per month per child, or sorry, more than 1000 per month per child? Two options. Either amount fully taxable or amount in excess of 1000 taxable. Will you remember this? But what if now the employer is giving the educational facility in any other institution? Now here, is this institution owned and maintained by employer? No. Has the employer made some arrangements here? No. Meaning that whatever cost of that institution was there, the employer is actually meeting that cost only, which is reasonable only. So in that case, the amount actually spent by the employer in such institution will be your benefit, not the reasonable cost, because that amount spent itself is a reasonable cost only. Got it? So what I will do? I will take this amount, hello, duplicate, I will write it here, and I will now dash, 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 and now this will be what? Fully taxable. What did I say? Fully taxable. Even if it is for children, you are not supposed to take 1000 per month per child exemption here. This is fully taxable. So if this actual amount spent by employer is 1000 per month per child or less or more, will not make any difference. This amount is fully taxable. Will you remember this? Sure, everyone. Now see, minimize, then copy, next page, paste. Okay, what I'll do now, pay attention. I've written the same thing now, but I will do a little bit upgrades over here. Now instead of employees' children, if the educational facility is provided for household members of employee, first change. Can you identify the change? Now the educational facility is not given for employees' children. It is given for household members of the employee. Color, which color? Blue color. Friends, blue color. Hello everyone. Employees, household member. Now to employees, household members also, the education can be provided in this type of institution or any other institution. So if in this type of institution, the educational facility will be provided, then the amount spent by the employer will be lower. I have to ignore that. Hello, sir. And here also the reasonable cost of education will be taken. Hello. But the difference is the 1000 rupees per month per child exemption which was given for children, no. will not be available. Whatever reasonable cost of education is there for other household members in such school, okay, no, it will be fully taxable. It will be fully taxable. So the 1,000 per month per child exemption will be available if your child, if employee's child is studying in a school owned and maintained by employer, or where employer has some arrangements, and in that case amount actually spent by employer in that school is not taxed. Reasonable cost of education is taxed. But if that is 1,000 per month per child or less, will not be taxed. More than 1,000 per month per child, then only it will be taxed. But that same reasonable cost of education will be taxable here. Hello? If the educational facility is provided to household member of the employee, then that same amount will be taxed here. But it will be taxed fully now. Now 1,000 per month per child exemption which was available in case the educational facility was given to employees' children will not be available here. Got it? So what if the reasonable cost is 300 fully taxable, 800 fully taxable, 1,000 fully taxable, more than 1,000 fully taxable, entire amount taxable. And this goes without saying that this is taxable for employees' children also, so it will be taxable fully for household members also. Done. If you understood this properly now, this is very easy. Got it? Shall I move ahead? Next one. Pay attention now. Pay attention. Few small things which you are supposed to keep in mind. Those things I will explain with this perquisite only so that you don't forget. Okay. First thing which I would like to explain here is cost of training or refresher management course. Training or refresher management course done by whom? Of the employee. So who is getting the training? Employee is getting the training, no? Whose refresher management course is undertaken? Employees. And the cost of such training is met by whom? Employer. Now tell me, is it a personal benefit for the employee? Is it a personal benefit for the employee? Why not? Employee is learning, employee is getting the training, and for his training, for his refresher management course, employer is spending. So ultimately employee is getting personal benefit, no? Or not? In this case, employee is not getting any personal benefit. This amount is spent by the employer for himself. Because if you want to work for me, I will have to get you trained. If you want to work with me, I will have to, if you want to work with me at higher levels of management, I will have to get your refresher management course done. Only then you will be able to work for me. By spending this money on you, you will be efficiently able to do your duties for me, which is required for myself. I will not be incurring this expense for you to provide you any personal benefit. Getting my point? So my intention by spending this amount is not to provide you personal benefit. Rather, it is spent for myself only. And the amount which I am spending for myself, how can that be treated as your personal benefit? This is not a personal benefit only for you. And even if some benefit happening to you, that is fully exempt. Taxable value in this case will be nil. So if such type of benefit is given in the question, what you will do? Amount spent by the employer on the training of the employee, 50,000 rupees. You will write in the salary statement, amount spent by the employer on the training of the employee. In the bracket, you will write fully exempt perquisite, outer column nil. Done. Will you remember this? So Will it be treated as a personal benefit for the employee? The answer is no, sir. This is not a personal benefit for the employee. Hence, the value will be fully exempt and taxable value of perquisite here will be nil. You have to remember this. First important point. Okay. Second important point. See, sometimes scholarships are also given. Do you know scholarships? And those scholarships are educational scholarships. Educational scholarships. So these educational scholarships by any person to any person is fully exempt under section 1016. Fully exempt. Fully exempt. Any person giving educational scholarship to any person. So you are receiving educational scholarship now. That educational scholarship is fully exempt income for you. It will never be taxable. It is coming from any person. It will be exempt for you. 1016 says that educational scholarships are exempt incomes. That's it. So if your employer is giving educational scholarships for you, for your children, for your household members, can the employer provide educational scholarship? Will you consider that as perquisite and charge? No, that is not income. That is exempt income. Hello, forget it. So what you will do? Educational scholarship provided by the employer. Amount was 20,000 for the children of the employee. Outer column you will write nil and in the bracket you will write fully exempt under section 1060. Done. Will you be able to do it? Sure? Okay, one more thing. One more important thing. If cost of subscription of periodicals and journals. Periodicals and journals means what? Magazines. Okay. Monthly basis few magazines are coming, no? Like Vogue is there. Some ICI's magazines are there. Professional journals and all. So these are periodicals. So those materials which are periodically published every month, every quarter. So they are known as what? Periodicals and journals, sometimes known as magazines also. Yes or no? So if you want to read some journals, if you want to read some periodicals, meaning if you want to read some magazines, so that magazine has some subscription cost. You pay that subscription cost and then you start getting those magazines or periodicals. Yes or no? But the cost of those periodicals and magazines, that cost is met by employer. Cost of subscription is met by employer for the employee. Now the question arises, if it is met by the employer for the employee, will it be treated as personal benefit? Will it be treated as personal benefit? The answer is yes. If the periodicals and journals are personal in nature, then the benefit is fully taxable. Yes, it is a personal benefit and then it will be fully taxable. But if the journals or periodicals whose subscription cost is met by the employer, if those periodicals and journals are of professional nature, which nature? Professional nature. That time, any cost of subscription of these professional journals met by the employer on behalf of the employee will not be treated as personal benefit. Because the subscription cost is made by employer just for the sake that you learn. And if you learn through these journals or magazines, etc., only then you will be able to apply that knowledge for my work. So the cost of subscription is not met to give you any personal benefit. It is met for my betterment only, for the betterment of your employer's business. That if you read these professional journals, no, your knowledge will be updated. You will keep yourself updated. Yes or no? And by that updated knowledge, you will be able to perform your duties for me diligently, efficiently. So this cost is met with that intention and not with an intention to provide you some personal benefit. Hence, this is not treated as a personal benefit and it will be what? Fully exempt. So what will be the taxable value of perquisite here? Here it will be nil, and if it is personal in nature, then the taxable value of perquisite will be amount spent by employer minus recovery if any. Yes or no? Minus recovery from the employee if any. So whatever amount of subscription the employer is paying, that entire amount will be your benefit minus any recovery from you. The balance will be taxable, but this balance will be taxable only if the professional journals or periodicals are personal in nature. If they are professional in nature, then this entire benefit will be exempt. Taxable value will be nil. What I am doing, while doing the main perquisites, the perquisites for which exemption is there, I'm discussing those also with the suitable places, so that along with this I can tell you, see, I told you note number 3 in that perquisite, go and see the note number 3. In note number 3 you will get this type of exemption. So I'm not going to give you a separate list of exempt perquisite. Why? Because I have discussed all those exemptions of perquisite along with the respective perquisite itself in the form of notes, so that when you read the main perquisite, the part of it also will be remembered by you. Okay, while doing this, I am supposed to take the exemption. If separately the list is given, you will have to put more efforts to remember all those things. But if it is put at the proper place, you will remember these things now. Getting my point, everyone? So this was your educational facility done. Okay, one question should I ask? To meet the cost of education of your children, your employer is giving you 500 rupees per month per child. What is this? To meet the cost of education of your children, your employer is giving you 500 per month per child. This is allowance. This is not perquisite. And if you remember, this is children education allowance. And if it is provided for one child, will be exempt for one child, but only 100 per month per child. If it is given for two children, it will be exempt for both the children, but only 100 per month per child. If it is given for more than two children, then it will be exempt for two children only. Third children fully taxable. For two children, only 100 per month per child. Yes or no? Actual amount you are spending out of children education allowance will not have any effect, because the exemption is given based on amount spent, no, based on the limit, IT rules limit. Done, no? Will you remember this? Sure. Should I move ahead? Okay. So now coming to the next perquisite. The last perquisite in clause number 3 is your travel tickets. So I will be discussing this 17 subsection 2 clause 3. In the clause 3, this is the fifth benefit. Fifth benefit is travel tickets. Meaning the tickets, if they are provided free or at concessional rates by the employer, and employer will be an employer in transport sector. Only an employer in the transport sector who is running buses, etc., can provide you the bus tickets and all, no? A manufacturing company who is your employer cannot provide you such tickets. These tickets will be provided by that employer only who is having transport business, transport of passengers, yes or no? So in my transportation of passenger business, in this business, you are my employee. So if you are my employee, no, you will get benefit from me. What benefit you will get? See, in my buses, no, from Madurai to Chennai, or for example, from Tirupati to Chennai, whatever buses are running, okay, on these routes, few routes are there. On these routes, whatever buses are running, those buses are run by me only. Okay. Now, in these buses, if you want to travel, you can take the ticket from me. I will give you free. Or I charge 1,000 from others, but I will charge only 300 from you. Hello? For you also I can give this benefit, and for any member of your household also I can give you this benefit. So this travel tickets for whom? For employee or any member of household of the employee. These travel tickets can be given by the employer. Either it can be given free of cost or it can be given at a concessional rates. So tell me, any personal benefit arising here? The answer is yes, personal benefit is arising. So as per rule 3, sub rule 6, the taxable value of perquisite here for this personal benefit will be how much? Just imagine how much should be the benefit to you. Come on. If I have given you one ticket free for your travel from Madurai to Chennai, so how much is your benefit? The amount which I usually charge from my passengers, meaning the amount which I charged from outsiders who are not my employees for this ticket. If you were not my employee, I would have charged the same amount from you also, which I am not charging, which you are saving, is your benefit. Minus the amount which I am recovering for each ticket will be your benefit. Easy or not? So tell me what I do. Taxable value of perquisite is amount charged by employer from general public who is not my employee for such ticket minus amount recovered from the employee, if any. Whatever balance will be there, that balance will be the taxable value of perquisite in your hands. If the ticket is given for you, then also this amount is taxable for you. If the ticket is given for your family members, then also this amount will be taxable for you. Understanding? Why this is taxable, you know? Bus ticket is how much? 1,000. Your employer says that I will give you one bus ticket for 300. So you took 10 bus tickets for 300 and sold all the 10 tickets for 900 each. Still you are earning 600. Getting my point? That 600 per ticket you are earning by spending 300 gives you 6,000 benefit. So your employer might give you taxable salary of 6,000 like this also. This is definitely a personal benefit given by the employer. Employer knows that you can do like this. You can earn your salary in this way also. So he will say that do one thing. I will give you 6,000 salary less. Take the tickets from me for 300 and sell them at whatever price you want. You went near the bus stop and you asked few of the passengers, you want to go to Madurai? Okay. See, this bus is coming right now. In this bus, the travel company will take 1,000 from you. I have one ticket. I can give you that ticket for 900. I can give you that ticket for 800. Still, it is cheaper for that passenger, no? He will definitely buy that ticket from you. So your 300 which you have given to the employer, that you recover, and over and above that you recover 600 rupees more. or each ticket you are getting 600. Just imagine in the whole month if you sell 100 tickets like this, you will earn 60,000 rupees as salary. But this 60,000 employer did not give you like this. You only told your employer to give your salary like this. Getting my point? So even this should be taxable as your perquisite. Hello Kaushik? Awake no? Understanding no? Perfect. Very good. Now see. Now this benefit is given by whom? Employer in transport sector. Employer in which sector? Transport sector. And that employer should not be Indian Railways or airlines. Airlines, no. Indian Railways, no. Other than Indian Railways, other than airlines, any other employer in transport sector giving this benefit, only then it will be taxable. Meaning that if you are the employee of Indian Railways, if you are the employee of airlines and you are getting the same benefit from your employer, meaning Indian Railways or airlines, this benefit is fully exempt for you. Free or concessional tickets given by Indian Railways to its employees and family members, fully exempt. Free or concessional tickets given by airline companies to its employees and its family members, fully exempt. So this will be taxable only if the employer is other than Indian Railways, other than airlines. Only then this valuation will be done. Getting my point, friends, everyone? So why Indian Railways and airlines are excluded? See, have you ever traveled in train? We all have traveled in the train, no? So if you buy a ticket, train ticket, your name is written on that ticket, you know. Reservation is on your name. And the TT will come, he will check your ticket, he will check your name, and with your name, he will check the ID card also. If he finds someone else traveling on this name, he will throw him out of the train. You cannot travel on someone else's ticket. So if Indian Railway will give this benefit, or the airlines also, airlines are very strict compared to railways. If the air ticket is on your name, just imagine before entering the airport, no, one security guard is standing outside the airport entry gate. He will first check your ticket. Along with on your ticket, your name will be checked. He will check what? Your ID card, Aadhaar card, PAN card. Only if these two matches, he will allow you to enter the airport premises. Otherwise, you're not supposed to see the airport premises also. Forget about traveling. So the person on whose name the ticket will be issued, that person only will get this benefit, nobody else. So this benefit cannot be encashed by the employee like he did for bus tickets. Bus tickets he can encash, no? Whatever benefit happening, he encashed 600 by selling those tickets. If one ticket is issued to him by Indian Railways or airlines, tell him to sell this ticket. He'll never be able to sell those tickets to others. Others cannot travel on these tickets. So this benefit will be provided to the employees or household members. They will only take that benefit, no one else, and it cannot be encashed. Hence, that benefit is fully exempt. Let it go. Got it? Sure? So this brings to an end clause number 3. All the 5 benefits which we have discussed, the valuation which we have checked, these values like this will be calculated, and these values will be taxable in your hands if you are a specified employee. And who is a specified employee? We have already discussed earlier. Done, everyone? Shall I move ahead? Okay. Now pay attention over here. Pay attention. Now what we are going to do? We are going to discuss about other perquisites also. So other perquisite is 17 subsection 2 clause 4. And believe it or not, you know this perquisite already. Because while doing domestic servant facility, while doing gas, water, electricity facility, I have already explained this perquisite. What is this perquisite? This is saying that any liability or obligation of the employee, this liability or the obligation of the employee is met by the employer. If the employer would not have met, it was you who was liable to pay this, but your liability paid by employer, your obligation met by employer. So whatever the obligation is, whatever the liability is, irrespective of that, was it your obligation? Yes. Was it your liability to pay such expense? Yes. If it is paid by your employer or reimbursed by your employer, meaning met by your employer, entire amount which he is meeting, entire amount which he is paying will be your benefit, will be taxable for you. Your servants which you have engaged, who is liable to pay, make the payment to them? You. But employer paid it. But employer reimbursed their salary. Clause 4 purpose it. Your gas bills, water bills, electricity bills which are coming on your name, because you are going and buying that gas, water, electricity, connection is on your name. You are under an obligation or liability to pay those bills, but your employer is paying. But your employer is reimbursing them. Fully taxable as per this clause. Understanding? What about your professional tax, which you were supposed to pay to the state government? Do you remember? 10,000 rupees, 2,000 rupees, 10,000 given to you. Sorry, 1 lakh rupees given to you. Out of that 2,000 you pay. Or don't worry, we will deduct and we'll give you 98, we will pay. Only one effect. Take the deduction under 16 clause 3, professional tax. Third case I told you that time. Third case was employer is giving you full 1 lakh rupees of salary. Full 1 lakh rupees of salary. Out of that you don't pay 2,000 professional tax. And see, we are not deducting also. Okay. The 2,000 of your professional tax which you are liable, you are obligated to pay to the state government. Don't worry, employer will pay from his own pocket. Two effects. First, that 2,000 will be taxable as your salary. And second, take the deduction. Why did you charge that 2,000 as your salary? Because of this clause. Because it was your obligation met by employer. Got it? Everyone? Any obligation you say, there can be thousands of personal expenses for which the employee is liable, for which the employee is obligated to pay. Any expense, any liability, any obligation of the employee paid by the employer, met by the employer, as per clause 4, it is your perquisite. That's it. How much amount? Valuation should not be done here. Very easily, the value will be derived. The amount which is paid by the employer is your benefit. Fully taxable. That's it. Done. Understanding? So what will be the TVOP here? Come on, tell me. TVOP here will be amount paid or reimbursed by employer. That will be your benefit, fully taxable. Sure? This is clause 4. Now coming to 17 subsection 2, clause 4. Wait, one more important discussion here is remaining. Yes, clause 4. See, along with clause 4 now, I will cover one more important part here. Wait. See, this is employer, okay? And this is employee. Now, employer is giving what? Salary to the employee. Yes or no? Now, salary can be M for monetary salary and NM meaning non-monetary salary. Salary is some non-monetary things coming from employer is also your salary, And monetary things coming from the employer is also salary. Sir, give some examples. Employer is giving you basic salary. Employer is giving you commission. Employer is giving you allowances. Employer is giving you bonus. These are monetary salaries. Hello? Employer is giving you some reimbursement. Monetary salary. Money will come in your hands. Yes or no? But what are non-monetary salaries? Come on, tell me. Employer is giving you accommodation. Money coming to you or benefit coming to you? Benefit. But its value will be determined and that value will be treated as your salary. Is that value coming in your hands? No. Are you receiving that much amount in your hands? No. But that value is determined and that value is treated as your salary. That value is not coming in your hands. Getting my point? Employer is giving you motor car to drive. Isn't it your non-monetary salary? Yes. The value of that valuation of that motor car facility will be done and that value will be determined and that value will also be treated as your salary. But that value is not coming in your hands. Employer is providing you domestic servants. Domestic servants are given. For that the value was 5,000 rupees. Are you getting 5,000 in your hands? Or 5,000 worth of benefit? 5,000 worth of benefit. That worth of benefit is your income, is your salary. But that benefit is not, 5,000 is not coming in your hands. Getting my point? So monetary as well as non-monetary, both the salaries will be taken as a part of your salary. Okay. So if I say that your salary was, example, 10 lakh rupees. So in this 10 lakh, monetary salary was 8 lakhs and non-monetary salary was 2 lakhs. Can I say like that? Monetary means 8 lakh coming in your hands. Out of 10, 8 lakh coming in your hands. But 2 lakh, which is not coming in your hands, it is just the value of the benefits, which is determined and that is also charged as your salary. Just imagine, on 8 lakh rupees of income, are you supposed to pay tax? Yes. And on that 2 lakh rupees of income also, you are supposed to pay tax from the 8 lakh which you are getting in your hands. So on the entire 10 lakh rupees of income, including this 2 lakh rupees of non-monetary benefit, you are supposed to pay tax from this 8 lakh which is coming in your hands. So it will be very painful for you, no? Sometimes it becomes very painful for an employee. How come painful, sir? See, no, sir, I'm getting only 8 lakh rupees in my hands. Employer is giving me only 8 lakh rupees in my hand. In my bank also, the 8 lakh rupees is credited as my salary, sir. But see, these mad people, what they are doing, sir? They are saying that the 8 lakh which I am receiving is my salary, sir. I don't have any problem with that. But the employer is giving me accommodation, employer is giving me motor car, employer is giving me this domestic servant facility, etc. The value of that, according to them, according to the government, the value of these things is 2 lakhs. And that 2 lakh also they are charging as my salary, sir. So now even if I am getting 8 lakh in my hands, in my bank account as my salary, but from this 8 lakh, I have to pay tax on 10 lakhs. That is on that 2 lakh which is not coming in my hands. On that 2 lakh also I have to pay tax, pay income tax from this 8 lakh only. Getting my point? There will be a lot of pain. So what you are doing, you are going to your employer, telling your employer, see employer, I don't want your house. Keep your house with yourself. These are the keys of your house. I'll give you back your house. I don't want your house. No. These are the keys of your motor car also. Keep your motor car. No, I don't want to take your motor car also. And I have brought your domestic servant also along with me. Hello, Tambi, come. I will send your domestic servant back to you. I don't want all these benefits from you. Because these benefits are worth 2 lakhs and you are not giving me 2 lakh rupees of salary. Hello. That 2 lakh is not coming in my hands and I have to pay tax on that 2 lakhs. So, sir, do one thing. No, sir. I will manage everything on my own. Take these benefits which are worth 2 lakhs. Give me that 2 lakhs in my hands. From that 2 lakh, I will manage my own house. From that 2 lakh, I will manage my own car. From that 2 lakhs, I will manage my own servants. But give me 2 lakhs, I don't want these benefits. Because if 8 lakh plus 2 lakh will come in cash, or only then I will be more than happy to pay tax on that entire 10 lakh. Getting my point? So likewise, you approached your employer. So your employer was very, employer was a smart person. He was getting the things done worth rupees 10 lakh from you by paying you only 8 lakhs. Worth rupees 2 lakh, he was giving you the benefits. But now those 2 lakh worth of benefit you don't want to take from him. You want to take that 2 lakh rupees in cash. So now just imagine if he agrees to keep all these things and pay you 2 lakh rupees, don't you think that there will be a cash outflow happening from his business? Understanding what will happen? Cash outflow will happen from his business. So your employer is a Gujarati fellow, very smart. Employer will say, see, no, I will not take back the house. No, without you, house will be empty, man. House will have to take. No, 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 no. I don't want to listen anything. No, house you'll have to stay. You only will stay. You are my best employee. You are supposed to stay in that house only. And Tambi, if you are not driving this car will be parked in the office premises. Nobody is going to use. I have bought this car only for you. Macha, please take. No, take this car. No, no, no. I don't want to listen. Take this car. You have to take it from me. And what, Tambi? You are not taking care of, sir. I'm talking to my domestic servant, which I provided. Tambi, you are not taking care of, sir. From today onwards, 24/7, you are supposed to be available with sir. You are supposed to take care of him. Otherwise, I will throw you out. Go. No, 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 nothing. You will have to take the domestic servant also. What problem you are having? Only this, no, that all these benefits coming to you are worth 2 lakhs. And on that 2 lakh also, you are liable to pay tax. No, this is the pain which you are facing. No, don't worry. On that 2 lakh rupees of your salary, no, which you are not getting, which you are getting in the form of these benefits, non-monetary benefits. On that 2 lakh, whatever tax is there, no, I will pay. First, I will give you 2 lakh worth of benefit. And on that 2 lakh rupees worth of benefit, whatever income tax which you are liable to pay, no, don't pay. I will pay from my pocket. Why I am doing that, to earn your respect. Now you will say, see, my sir is very good, nice fellow. He is giving 2 lakh worth of benefit, which is our salary. And on that, we are liable to pay tax. But this good fellow is not allowing us to pay the tax on that 2 lakh also. He from his own pocket pays the tax on that 2 lakhs for us. Very good fellow. He'll go in heaven. Not now, but later. Okay. So, you earn my respect. You earn my respect. If I tell you that, see, I'm giving you this benefit, this benefit, this benefit, these are worth 2 lakh. Just imagine the status. You will be living in company house. You will be driving the company's car. You will be having servants at your home. Worth 2 lakhs. I will not give you 2 lakh rupees of cash salary, but these are the benefits worth 2 lakhs which I will be giving you. And don't worry, no, on that 2 lakh, whatever tax will be there, no, I will pay from my pocket. So you'll be happily accepting this offer. And that is the reason why you are employee. And I am employer. To save my 2 lakh rupees of outflow, I gave these benefits and I agreed to pay tax on that. Just imagine how much would be the tax on that amount of 2 lakh. If I say 10% rate, or let us take 30% tax also. 2 lakh, 30% tax will be how much? 60,000. So my outflow will only be 60,000. Even if I agree to pay your 30% tax on that 2 lakhs. If you were liable to pay 30% on that 2 lakhs, it was how much? 60, no? So I will have to pay only 60,000 from my pocket, but still I will be saving 1 lakh 40. But if I don't do it, I will have to entirely give you that 2 lakh rupees of salary. Business. This is business. I saved my 1 lakh 40. So it is a benefit for me also. And you also, you also thought that your employer is a good person. You will be loyally working for me now. So it is win-win for both. Now the problem arises here is that on your non-monetary perquisites, which were 2 lakhs, whatever tax which we calculated, example we are taking, see this tax calculation and everything will come in TDS chapter. That time we'll learn that how to calculate this tax on non-monetary perquisite which the employer is paying from your pocket will not be deducted as TDS from your salary. Understanding? If I agree to pay this tax, so this tax will not be deducted out of your salary as your TDS. This will be going from my pocket. So when we will be learning the TDS chapter, no, in the TDS chapter, TDS from salary is there. In that, we will learn this calculation, that how this tax is to be calculated. Yes or no? But right now, just take an example, no. So if the tax on this happens to be 20,000, let's not take 60 is too high. Okay, no. Let's take 20,000 rupees, 10% tax only, 20,000 rupees tax. So this 20,000 tax, which was there on your income, non-monetary perquisite is your income. So this is the tax on your income. This is your liability. This is your obligation. The income tax department is going to take this amount from you because it is on your income. Yes or no? But this tax on your non-monetary perquisites is paid by whom? Paid by the employer. Don't you think? Your obligation met by employer is a perquisite under 17(2)(4). Just now we discussed this one. Same, no, all the conditions are fulfilled. This is your obligation only. I am paying from my pocket, so it is a clause 4 perquisite. And if it is clause 4 perquisite, so whatever amount I have paid, this entire 20,000 which I have paid will be what? Will be taxable as your perquisite under the head salary. Understanding or not? But wait, what will be the problem here? Sir, 2 lakh is our non-monetary benefit. On the tax which you are paying, that tax is also not coming in my hands, no? And that tax also is treated as my income. Is this 2 lakh coming in your hands? No. I am paying that tax directly to the government. But still this 20,000 is treated as your income and again charged to tax. Now this 20,000 will again be included in your salary statement. Now on this 20,000, again there will be income tax. Because this is your income now, no? As per clause 4, if this 20,000 is your income, it will again be included in the salary statement. On that, how much tax? That tax now you will have to pay. Don't worry, I will. Again, that was your obligation paid by me. Again, that will become your perquisite. On that also, tax will be there. Tax on tax on tax on tax on tax. It will keep on going on, going on, going on. Understanding? The chain will never break only. Tax on non-monetary perquisite paid, and if this amount is treated as your salary, hello, and if this amount is taxable for you, on this, whatever tax you will now have to pay, that is a tax on tax only. And what if that tax also is paid by the employer? Again, that will be treated as your perquisite. Again, that will be taxable for you. And again, on that amount, another tax will be charged. Getting my point? The thing should end. Loop should not form like this. Getting my point? So what the government said, that in the very first case itself, on the non-monetary perquisite, whatever tax was there, which was paid by the employer on behalf of the employee, don't make it clause 4 perquisite and don't tax it. Entire amount will be fully exempt under section 1010 double C in the hands of employee. For employee, this is fully exempt. Even if it was the obligation of the employee met by the employer, even if it is covered by clause 4, but it will not be taxable under salary head. Why, sir? Because this entire amount is treated as your exempt income. So the 20,000 paid by the employer for you, Will you consider this amount as a perquisite under clause 4 and charge it under the head salary? No, no need to do it because you are already getting the exemption for this under section 1010 CC. Got it, everyone? Now think about me. Discussion about you is done. For you, this is exempt income, will not be taxable. Okay. Now think about me. Have I paid that amount for my employee from my pocket? So can I say this is an extra expenditure which I am doing on my employees in my business? So now I will try to take the deduction for this expense as my PGBP expense. So under the business head, from my business income, I will try to take the deduction for this 20,000 as my business expense because this expense is my employee's tax. I have paid from my pocket. Hello. So this is an expense incurred in the course of my business or profession on my employees. So for that, I should get the deduction from PGBP income under the head PGBP. I will say like that. So what they are saying, any tax on the non-monetary perquisites of the employee paid by the employer shall be disallowed under the head PGBP as per section 40 clause A subclause 5. There is one disallowance under 40 clause A. Subclause 5 is there. As per subclause 5, specifically mentioned that this type of tax on the non-monetary perquisites of my employee, I cannot claim it as my PGBP expense. If I claim it, it will be disallowed. It will not be allowed as a deduction to calculate my PGBP income. So this is disallowed for the employer. Just imagine if this was allowed to the employer, no? So there was a blunder. How much tax was there? 20,000 was there, no? If just imagine if this disallowance was not there, so employer would pay your 20,000. Hello, he will ask you to pay 18,000. Give me 18,000. See, the 2 lakh rupees of non-monetary benefit, huh? On that you are supposed to pay how much tax? If you go through the government, how much you are supposed to pay? 20,000 you are supposed to pay. You want to save some tax? Do one thing. I will pay entire 20,000 from my pocket. I will pay entire 20,000 from my pocket. Your employer will pay 20,000. You just give me 18,000. Still 2,000 saved, no? You will always tell your employer only to pay this tax because you will be saving 2,000 by doing this. Understanding? So how much you will give me? 18,000. And in return, how much tax I will pay for you? 20,000. So I lost 2,000, no? But that is a smart thing which I have done. Because this 20,000 will now be my expense. In my PGBP income, I will take the deduction of 20,000. My PGBP income will be reduced by 20,000. On that 20,000, I will save 30% tax. Company, 30% tax rate. 30% tax. So on my 20,000 income which got reduced because of this deduction, I will save 30%, meaning 6,000 rupees tax I will save. And to save this 6,000, I can give away this 2,000. Still 4,000 I have saved. Understanding? Every employer will start doing it for tax planning. Just imagine I have 1,000 employees in my company. I have 1,000 employees, and for every 1,000 employees, if I am saving 4,000 rupees in tax, just imagine for every employee I am saving only 4,000. And likewise, I have 4,000 employees. How much tax I am going to save? 40 lakh rupees of tax I will save. I will save 40, will be a loss for the government, no? So will the government allow me to take this deduction? Bloody, we don't allow you the taxes paid on income, on your income also, whatever tax you are paying, we are not allowing that. This is a tax on someone else's income which you are paying. How can we bloody allow this income tax to you? If this tax would have been paid by your employee himself, was he going to get any deduction for this? No. But since you are doing a business saying that this is an expense incurred for my employee, but bloody this expense is in the nature of income tax only, no, which you are paying for him. And why do we give you deduction for that income tax? We bloody don't give you the income tax deduction for yourself. This is the income tax of somebody else which you are paying. Why do we give you the deduction for this? One, this logic is also there. And two, you will start avoiding the taxes by making the payment. Getting my point? Like this. So to save all these things, what they have told? That under the head PGBP, the employer will calculate his PGBP income. From his PGBP income, whatever amounts he spends on his employees will be allowed as a deduction, but not this amount which he is spending on his employee. This is not treated as his business expense. This will not be allowed as a deduction, disallowed. And for employee, it is not a perquisite taxable under the head salary. It is fully exempt income in the hands of employee. Will you remember this point? Very important. Very, very, very important point. Now, under the head PGBP now, when we will be doing disallowances, at that time, this clause will come there. That time, what I will say? You know this. That time I will not explain because I have already explained this here. Understanding? That I always say, but I end up discussing. Because that time your faces are like, sir, actually we did this. Then I will tell you. You remember? Take the keys of house, take the keys of car, take the domestic servant, give me 2 lakhs. Example I gave. Then you will recollect, oh sir, something like this we did. Which I am explaining right now with PGBP. Okay. So that time, see, my examples are always framed in such a way, no, that if I speak the amount or if I speak the names also, no, you will remember. Now, whenever I'll say Mohan, you will remember motor car facility. Motor car is equal to Mohan. Madhav also come there. Madhav also came there. So you remember that Mohan and Madhav example we took there. So whenever I have to take that reference in later on lectures, no, I always speak these names. Mohan was there, Madhav was there. So these names are given like the reason for that is this only. Getting my point? Everyone? So this was your class 4 perquisite. Now coming to the next perquisite, 17 subsection 2 and clause number 5. Okay. See, very easy. Very, very, very easy perquisite. This perquisite is saying any sum payable by the employer to affect an insurance on the life of the employee or affect the insurance on the life of the employee or for annuity for employee. That sum which is payable during the previous year is equal to personal benefit in the hands of the employee and it will be taxable in the hands of employee. Done. Clause 5 over. In simple terms, I will tell you, any sum payable is premium. Premium on life insurance policy or annuity policy of the employee. Life insurance policy of the employee and annuity policy of the employee. Pension policy. Annuity policy means what? Pension policies. So insurance companies also issue what? Pension policies, annuity policies. or normal life insurance policies also. So any life insurance policy of the employee or the annuity policy of the employee taken from an insurance company, and to that insurance company, if employer pays what? Any sum to affect these policy, the sum paid is known as premium, sir. So I am paying life insurance policy premium for my employee. I am paying annuity policy premium to the insurance company for my employee. That is a personal benefit in the hands of my employee, taxable for him under the head salary. This is also a perquisite for my employee. Why, sir? Why? Why this is a benefit? This is 100% pure personal benefit given with an intention also that I want to give you this personal benefit. Your life insurance policy, no? You take out and you pay the premium. Your annuity policy, no? You want pension in future, no? You take the policy and you pay the premium for that policy. But in your employment contract, when we are sitting on the table, when you are joining my job, okay, in the interview, in the joining table, on the joining table, I am telling you that don't worry, I will give you this much basic salary, this much commission, this much bonus, this much allowance, and for you, I will make the payment of your life insurance policy. In that contract only I will write. For your pension also, no, in future, whatever pension you are going to take, for the pension also, we will take out one policy, and that pension policy also, annuity policy also, whatever premium is there, I will pay. I have written that thing in the contract. So this is my contractual obligation to pay this amount for you. And by doing this, I want to offer some personal benefit to you. See, no law in India wants me to make such payment to you, to make such payments on your behalf. This I am doing purely with an intention to provide you what? Personal benefit. That whenever you will die, or whenever the policy matures, whichever happens earlier, that time this policy will give you only money, because this policy is taken on your name. Hello. Annuity will come from this policy to you only. So there is a confirmed benefit which is going to happen. And to give that benefit to you, I am paying you premium. Premium payment is made with an intention to offer a personal benefit to you. And giving you such kind of benefit is from my side only. Voluntarily I am doing. And it is as a result of our negotiations when we are sitting on the table. You are telling me, sir, you have to pay me what? Pay my insurance premium, huh, sir? At the time of joining only, these negotiations are happening. I also agree to give you such kind of personal benefit. So just like other salaries, this is also a salary which I am giving you. Understanding? But sometimes this is not payable. Sometimes I have to pay in your PF also. Amount is payable by the employer in your PF also. Amount is payable by your employer in your ESIC scheme, employee state insurance scheme also. Amount is payable by the employer for other staff welfare benefits also, which I have to pay as per any legal requirement. There is law in India, PF law, which tells me to make the payment to the PF account of my employee. So whatever amount which is payable by me in this year for your PF account, that amount will ultimately give you benefit in future. Because of my contribution happening in your PF account, you are going to get the benefit in future. But this amount I am not contributing right now with an intention to offer you a personal benefit. I am contributing this amount because there was a legal requirement on me. If there was no law, I would not have contributed this amount. So the law is compelling me to make such payment on your behalf. Law is compelling me to make a payment on your behalf in ESIC. That is out of compulsion I am doing. Hello. But this is not out of compulsion. This I am doing voluntarily. This is as a result of our negotiations. I want to offer this benefit. No law in India tells me to pay your life insurance premium. No law in India tells me to pay your annuity premium, but still I am paying. Then was it a statutory obligation or there was an intention to offer personal benefit? There was an intention to offer personal benefit. So this amount should be treated as your personal benefit. This amount should be treated as your perquisite. But see, only this amount is not payable by the employer. I told you. Apart from this, other amounts are also payable during the year by the employer. But those amounts are either exempt or they are taxable in any other way. Getting my point? But those amount will not be coming here in clause number 5 as your perquisite. Clause number 5 will cover only these two things as personal benefit. One, your life insurance policy premium. Two, your annuity policy premium as per the contractual obligation between you and me. If it is payable by me, so whatever amount it is payable by me during the year, whether I have paid or not, will not make any difference. Whatever amount which is payable by me during the previous year as per the contractual obligation for your life insurance policy and for your annuity policy will be treated, confirm it will be treated as your perquisite as per clause 5. Because this is not paid as a requirement of any law. This is paid voluntarily with an intention to offer what? Personal benefit to you. Got it, sir? So other amounts payable during the previous year by the employer for the employee, what you will do? Don't bring those amounts here. Those amount different treatments are given. Either those amounts are exempt or their taxability is different. But here only you will bring these two amounts. Will you remember? Everyone. Now, there is one section. Section 17, subsection 2, clause 6. Okay. Which talks about sweat equity shares or securities issued under ESOP. Okay. So this clause 6, tomorrow at 4 p.m. We'll start from here. Done, everyone? So whatever we have studied so far, have you all understood everything? You see, again and again I'm asking because I don't want you all to keep any doubts. If any doubts are there, you are free to ask me. Okay? So don't have any doubts. If you have, please ask. And if you don't have, Jai Hind. Bye bye.